Hello and welcome to NDTV Profit. You're watching India Market Close. The markets seem to take profit booking right now as we speak. But let's welcome in R.C. Bhargav, chairman at Maruti Suzuki, to get his reaction as a veteran to the industry. Mr. Bhargav, welcome to the show. Your initial reaction with regards to the boost the auto sector could get from here on?
I think the reforms in terms of the GST restructuring is one of the most massive, important pieces of new actions which the government has taken for a long time. I think it is going to have a huge impact on the economy. I think most of us are underestimating its value. We will see how it will energize the people now, and the customer particularly will suddenly find that things have changed for him. The income tax relief came to him. On top of that, the repo rates have been coming down. Interest rates have finally started coming down. We have more money now in the pockets of the customer in the future because household expense items have all become cheaper. So net, there's far more purchasing power with the customer, and he will look upon this Diwali as a time to go on a shopping binge.
Go on a shopping binge. That's interesting, Mr. Bhargav. So will purchasing power then return with just the GST cut?
It reduces the retail price of a small car by 8.5% to 9%. That is significant. For a car costing 5 to 6 lakhs, it means something like a 50,000 rupee reduction.
Right, we're talking about a 50,000 reduction, but will this person actually have that 5.5 lakhs to begin with?
No, earlier on when the prices went up, he didn't have all these other things with him either. Over the last 2-3, these prices have been going up for the last 5 years. During this period, partly his incomes have gone up. This year particularly, as I said, his other expenses have come down and his income tax has given him more money. Now the price has come down by 50,000 rupees, which sets off at least part of the price increase which has taken place. So altogether, it should make a difference to his purchasing ability.
Okay, so that's with regards to where purchasing ability goes. What's the impact, Mr. Bhargav, that you're seeing when you talk about the vehicles that come under the 40% tax bracket?
We are in the 40% tax bracket also. We sell maybe about 30% of our cars in that tax bracket. Only about 70% of our cars are in the lower tax bracket. And there also we will see a slight price improvement because the tax was 43-45%. That's coming down to 40%. And overall, I think the car industry will benefit to the extent that the slackness in the growth rate will now, I think, change. And we'll see a revival of the growth of the car industry. And it should reach what used to be the normal 7 to 8% a year.
So industry is looking at 7 to 8% kind of growth on the back of this, Mr. Bhargav. But what's the kind of volume growth that you see for Maruti?
I can't tell you the volume at the moment, but all I can say is that we see the growth rate going up, and the growth rate for small cars going up to 10% a year, for the overall business going up by about 7 to 8% a year in the course of the next 6 months.
Okay, so overall volume growth is something that the street should be eyeing from here on as well. Mr. Bhargav, the other question we have is, how does compliance change from here on?
It's certainly easier to manage tax now when there are 2 slabs and not so many definitions of what is a paratha and what is a naan and what is what. the lack of discretion which now has been brought in, that things are just one category, is going to make both enforcement, compliance, everything much easier.
I think a la carte is better than the buffet is what you're coming through from here on. Is this an advantage for EVs then, Mr. Bhargav?
No, if anything, it'll make it less attractive, no, because other vehicles have become cheaper. But the electric vehicles are having a special category anyway. 5% is a very comfortable rate of tax.
Okay, so yes, absolutely. You know, EVs do become less attractive because your other vehicles are getting cheaper. Mr. Bhargav, we do remember that you have been slightly lukewarm when it comes to EVs earlier as well, the adoption when it comes to electric vehicles. Do you see that changing from here on?
Both EVs, hybrids are both going to grow over time. That's happening world over. If you look at Europe, you look at America, you look at China, everywhere both EVs and hybrids are growing. It's not one or the other. And I think India will be having the same sort of development in the years to come. It can't be.
Right, you know, I mean, EVs is something that you should look at. Adoption is the key from here on. But thank you so much, Mr. Bhargav, for joining us on the show and speaking to us as well. So that's with regards to where the impact on the four-wheeler industry goes, and on a Maruti as well. In fact, the stock has corrected, now seeing cuts of nearly 1% trading at the day's lowest levels. What's interesting is the kind of profit booking that the markets are taking at this hour. In fact, I have my co-anchor Harsh, who's joining us from the Volkswagen downtown showroom as well. Harsh, it's interesting to see what the mood is like in the markets right now. I mean, we started off the day on a high. There has been correction that has come in. You are seeing profit booking as well. What are you picking up right now? Firstly, the mood check at the store as well.
Well, yes, so let me take you through a couple of these models, and let me try and give you a perspective as to what the discounts possibly could be on some of these cars. This is, of course, the Tiguan R-Line, and it has an on-road price of around 62 lakhs, which means that the reduced GST rate will likely give the buyer a cool saving of 4.5 lakh rupees. This is now the Virtus, and again, all of these are 4-meter plus cars. So that's something you want to keep in mind, that these are not the budget cars. This is for around 23 lakhs currently on road. And again, the saving on this would be roughly 1.5 lakhs, which is not bad at all, given the kind of ticket size that the car operates at. This one is the Tiguan, of course, and again very similar ticket size to the Virtus at this point on road. So again, 1.5 lakhs odd of saving that we might well see on this one as well. But I'm joined in by Sailesh Bilai, and he has been, of course, he's a veteran, as you'll see as he comes on the screen, and I had a very interesting conversation with him. Sir, you've been, of course, interacting with your customers over the last week or so. What is the sense you're getting? Do you believe that this GST rate cut will egg them on to buy the car? Is this what they are waiting for?
Yes, we do agree with that, because what happened, we interact with the customers, they're taking the test drive, they like the car, in fact they choose the color also, but they're saying just wait for a few minutes or few days, because we're expecting GST and it will take a bomb price to us, because we love the car, but we take the advantage, why not? When government is giving to GST subsidies that, so definitely we'll wait, and just let me know when the price will come. Definitely will come, and we'll go for it.
So customers waiting on the price, Hiral, essentially. But Mr. Sailesh, give us this perspective. This price cut, how quickly, what are you doing in terms as a store to try and close the deal? Because that's the other piece which you would really want to do. This period of uncertainty creates a little bit of hesitation for the customer. How are you closing the deal?
What we do, the customers, that definitely what we promise we have to give. So you do one thing, you do the pre-bookings. Okay. And whatever benefits are there, now I'm giving the particular price, but whatever price difference is there, definitely will help you out, and we'll complete the deal, and we'll give that price to you. There's no issues. But book the car, so you'll get the advantage. So last moment should not. मेरे को अभी गाड़ी चाहिए, अभी मेरा मुहूर्त है. Now Dashara is coming nearby.
Yes.
And people are waiting for that because it's an auspicious day, and all the automobiles, Dashara is a boom.
Right.
People are buying the car, particularly on that auspicious day. But what happened, particularly about this, now here, this year, we have two problems. One is GST, and Friday onwards, as you know, the Indians are superstitious. So Pitru Paksh starts. So they don't do anything on that. So to avoid that and to get the delivery on auspicious day, what we told the customers that do the pre-booking. So at least whatever price benefit, definitely we'll give you, but at least we can call the car and we'll give the benefit for that.
Typical sales pitch. It's back to you guys in the studio.
I won't be surprised if Harsh drives out with a new car or at least ends up booking it there, because that was quite a sales pitch.
Yeah, and it gives you some clarity as well that even if you're booking it right now, your GST will be on the day you actually pay and invoice it. So,
dealers need to do that. All right. Now, I just wanted to do a quick market check before we move ahead on the show, because that Diwali Dhamaka is there. But markets have come off, and that is also a fact. The Nifty giving up most of its gains. I think we need to pull up the line graph if we can for the Nifty, because you need to see what's been happening through the day. And for the last 20 minutes or so, it has been a downward streak. We hit that high on the Nifty soon as we started. It was a spike, but this is still a sell-on-rise market. And, we were having a conversation just a short while ago with R.C. Bhargav, where he said that people have not fully understood the impact of what is happening in the GST. Maybe that's safe to say with what's happening in the markets as well. So you are seeing a bit of tepid kind of move. This 2 o'clock band has been a little slow as far as the markets are concerned. Let me pull up the heat map for the Nifty very quickly and give you a sense of where the drag is coming in from there. And the reversal in some of those insurance names, Tata Consumer, etc., SBI Life, is something that you need to see, because as far as IT is concerned, they weren't participating at all. They were sitting this one out. But you had some of these insurance names at the forefront. I mean, this is profit booking in full glare over here, because even a Maruti now down about 1%. What is revving though is an M&M. M&M doing very well, Bajaj Finance doing very well. So some of the GST mood is there, but it has been a tempering of it. A Nestle, a Trend, all of that doing very well. So is ITC. I don't know why Tata Consumer is seeing this kind of a pain, because you're going to have a whole range of their products also benefit a fair bit. But nevertheless, some input tax credit concerns on insurance that could be seeing the mood flipping, and which is why you're seeing an HDFC Life and an SBI Life and those bucket of companies hurting. So definitely here sellers are coming back to the fore. Just let's pull up the broader markets for you and the advanced decline ratio. For a second, look at the mid cap. Mid cap is actually about 0.5% down. So there is a pullback over here, which is not too great. Even the small cap is looking at even worse. Yeah, about thereabouts, about 0.5% down. Both indices close to the day's low at this point. The advanced decline ratio will show you what a patchy day it has been. So midday somewhere, that mood has sort of dipped a bit, and you've seen sellers coming in, maybe thinking that the run-up for GST has already taken place. Think about it this way, markets will look at where profitability comes in, and now the sellers are at a higher position than the buyers in terms of the advanced decline ratio. Just the top gainers and losers on the broader markets before we move ahead and get more conversations, because here we're talking about the bigger picture, not just what's happening today. But nevertheless, the markets are about here and now. Delta Corp is down about 6.5%, because now there is clarity. Just the entry into a casino will have a 40% GST on it. Now, what you do over there is a different concern. The entry will now have a 40% GST. So, which is why you're seeing the hit there. Maybe Sri Renuka is reversing, because sugar was the bell of the ball yesterday. HDFC Life we talked about. Some of the defense plays are moving back. Data pattern, Cochin Shipyard, 197 seeing a bit of pain. 197 was on a zoom yesterday, so maybe you're seeing profit booking there. Here it's all about consumption. Look at these names. And you look at the company's names and the product next to it, if you mentally look at it. Bata shoes, M&M, high-end vehicles and electric vehicle being spared. Gillette is your razors, etc. Metro Brands shoes again. Bajaj Finance, anything you want to buy, you need to go to them for financing. Imami, creams, Colgate, toothpaste, Jubilant food, junk food, all of that is coming into this category. So the consumption boom and excitement is there, but tempered in the afternoon session today.
Absolutely. And you know, a couple of conversations with analysts also were indicating right now, Tamanna, that there could be potential profit booking, but the only thing which they are not accepting is that sluggishness, which probably is coming into the markets right now as well. So, as Tamanna was mentioning, selling at higher levels is absolutely evident. And the closing is going to be important at what levels we close as well, because we've given up the 24,800 mark as well on Nifty 50 in intraday trade. And if markets have to move higher, the participation with regards to banking is going to be absolutely important. And that will be the only sector which will help Nifty inch higher. If you pull up Bank Nifty as well, again, see a pretty flattish move. We are at the day's lowest levels on Bank Nifty. So don't see anything that could be coming in on that front. And, you know, FIs not covering their short positions is something which you're looking at. But let's understand the impact in terms of healthcare and pharma from here on. We have Shobhana Kamineni, Executive Chairperson at Apollo Health, joining in. Welcome to the show, ma'am. My first question coming to you is, overall, if you have to look at the GST reforms that have come in, the rationalization that you're looking at as well, what are your initial comments in terms of the reaction?
I now really think GST stands for good and simple tax.
Nice.
And that was, I was there in Parliament, you know, at 12 o'clock midnight when it was introduced as CI, when I was CI president. And the run up to that, we did so much work. And again, it was quite confusing with so many different rates. And within the rates, the different, how it got classified. I think this was a master stroke. Basically, after all those dark clouds we've been seeing with regard to trade, external, international trade, suddenly, you know, India has doubled down on Viksit Bharat. It was a Viksit Bharat to say that internal consumption is something that will drive us to this to the number 3 economy in the world very soon. And this move was quite brilliant.
Shobhana ma'am, hi, Tamanna here, and just, you know, so happy to speak to you today on what is a very, very important day. In terms of the business, can you help us understand what gets cheaper from your perspective? And do you see this translating into volume growth for you, higher demand? How do you see it translating in your case specifically for your company?
So 2 areas that I work in. First is the pharma retail and distribution. So this going down to 5%, and I can tell you, I've just been assessing from the morning how much work it's going to take. So I have something like 1.2 crore lines in our retail pharmacy that I have to reclassify. And so there's a lot of work behind it. But one thing I think, this is actually good work. Work we'll be happy to do because it will translate into the customers getting medicines cheaper. And for the life-saving medicines that are in our hospital, making it free, like the cancer drugs, I really think that's a very humanitarian step. So from a healthcare perspective, hospital perspective, it's a lot of work for us, but we do think that it'll really help the customer because the prices will go down. And the second part of it, in terms of consumption, I think people buy medicine because they need it. But what it does is it gives them the dignity that more people are able to afford it. So, you know, you will not hesitate to take that expensive cancer medication or, you know, keep compliance with the NCD drugs that you need every month because it actually comes down from 12%. Now it's 5%. So it's a good benefit. How much we will get translated. There's a lot of work that still needs to be done. So we are hoping in the next 2 days, they'll give us more clarity. The second area we work on is insurance. And removing GST on life and health was just the best move you can do. Because first, it didn't really make sense because on health expenditure, there's no GST. So if you bought a policy, it's actually negative for you. You're paying more. Now, when you remove it, I think this will give rise to way more insurance coverage, and that's good for the country. So on two counts of medicine and insurance, I think what has happened today is something that the country should be feeling so good about.
You know, on insurance, ma'am, I just want to get your view on the input tax credit, which is not there right now. And you're seeing, we've been speaking to, of course, insurers as well since morning. They will, of course, pass on all of the benefit. But do you think that this is going to be a bit of a pain point for some time, at least temporarily?
So this really is for hospitals, because we don't get any input tax credit because healthcare is free. So that's what we've been kind of really, from the hospitals and the diagnostic centers and all we've been actually saying, give us that also. So I'm hoping that in the when the fine print comes out, if some of the taxes that we pay, that we get the GST credit, if we can actually set it off, that will be a great boon for hospitals. With regard to the insurance companies, I think this has been a long ask that there's no GST on this. So especially for health. So I'm happy that they did this. I agree that it'll be tough for commissions when they pay it and they have to pay GST. But at the end of the day, I think it'll translate to more coverage. There'll be more people who can afford healthcare, outpatient insurance. All these, you're going to start to get new products.
Ma'am, so if you have to look at the overall business from pharmacy, diagnostics to digital health, the overall influence in terms of the business and the kind of cost saves that you will see and margin benefits, what is that ballpark that you're looking at?
So it's a fairly large figure. Like we ourselves do about 15,000 crores of retail sales, of which about 8,000 is just medicines in our 6,700 pharmacies. So if we can pass down almost 5% to the customers on a lot of these drugs, I think it's significant. It's and we are just, remember, we're only 7% of the market. Now just think how this would extrapolate out into the full market for drugs. So I believe this is a big step for the consumer. And for the insurer, I think that really what our insurance companies have struggled with is for more people to get covered by insurance, because the cost of the policies were so high. And I think this rationalization, of course, the input credit is a tough one. Maybe that'll get they'll be able to solve for that. But I think more people coming into the insurance coverage is actually a good thing for India.
All right. So I think the benefits that you can pass on and the benefits that you would see as a company as well are going to be quite large from here on. But thank you so much for joining us on the show and sharing all the views. But that's with regards to, healthcare. And we're not only talking about one segment over here, you're talking about the benefits pharmacy could see, diagnostics and digital health. But, after Harsh, I think another exciting ground report that we are picking up right now is from Mahima. Our colleague, she's live from Vijay Sales right now. Mahima, we did speak to the management of Vijay Sales, but what is the on-ground looking like right now? Are you seeing buyers who are flocking in at least to pre-book or to come in and see what is available so that they can have it at the earliest?
Right, Hiral, absolutely. So I think the enthusiasm from the customers is also being seen. I was talking to the salesmen here as well as the customers that I'm seeing around, and that's mainly around the instruments that have seen GST cut. That is your TV as well as your ACs as well as dishwashers, which has come down from 28% to 18%. What we're seeing is that yes, people are coming in and probably seeing for now as to what they want to buy, and then probably go ahead and book those post 22 September. They've also said the salesmen are saying that, the crowd which is looking right now probably is a weekdays, so slightly lower, but the expectations are that this crowd will probably double in the weekends, and that's something that they are expecting. Plus, when I was speaking to Mr. Nilesh Gupta, the MD of Vijay Sales, he said that now that this is confirmed, that the GST rate for ACs as well as TVs beyond that 32-inch will come down from 28% to 18%, he said that they're expecting at least a 20% increase in the overall sales in the festive season itself, which is a big number here to say, because last year was also a very good base when it comes to the festive sales, and a 20% upside beyond that, over and above that, in fact, is a big thing coming in from the MD himself. And he said that now we are sure that we'll be able to do that 20% growth. They'd given a range of around 15 to 20%, but now he's saying that we are sure that we'll be able to grow at that 20% rate. So that's the overall ground report that we are seeing right now. And yes, for sure, customers are seeing that enthusiasm and probably also coming in and getting the details of the TVs and ACs they want to buy and probably book beyond that 22nd September.
Absolutely, booking beyond 22nd September, and the deliveries will be taken then. Thank you, Mahima. We'll come back to you as well for any further updates, but we'll quickly step into a short break. Please stay tuned to NDTV Profit. We'll bring you top trading strategies with our technical and fundamental experts and put the stock light on the stock of the day, which is Netweb. Please stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you. Green Talk Social Impact Awards 2025, coming soon.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock.
Okay, welcome back. Well, markets have sort of lost their sheen on the GST Diwali Dhamaka. Nevertheless, you've seen the Nifty now dive to almost a flat level. Hopefully, we won't end in the red after the kind of start that we've seen. Let's get the technical view in, and of course Aditya Shah also joining in this afternoon. He's founder Hercules Advisors for the Fundamental View. Kush Bora, founder kushbora.com, talking to us about the charts. Welcome to both of you, and great to have you here. Kush, where is this resistance coming from? We don't seem to be holding on at all.
Hi, Tamanna. First of all, very good afternoon to you and to all the viewers. Who would have thought, right? I mean, with the kind of big bang opening that we saw. But I think, once if you take the news impact out, I think the 24,800 to 25,000 resistance zone was, always going to act up. I remember how we were speaking about how the 25,000 mark is a key level to take out. And what this also confirms, of course, I'll wait for the data, in the evening to come. But what this also confirms is that, you might not see a very big short covering rally from the FIIs or a short covering figure from the FIIs. That's essentially where this pressure is coming from. So yes, we've seen most of the gains being taken out, but I think right now Nifty is in a no trade zone where 24,800, 25,000, as I mentioned, remains a resistance at the immediate level, and slightly lower levels of 24,400 from where the Nifty bounced back remains a support. Just a quick word, just to put in context, I think the rally actually had happened 3 sessions ago, where last week we fell sharply to 24,400, and this week we recovered almost about 600 points from those lows. So yes, the rally had taken place, more of a buy on rumor, sell on news. Right now, if you have a position on Nifty, it's okay to hold, but I wouldn't initiate a fresh one.
Okay, so Kush, you're saying you will not initiate a fresh one at current levels. What are you then betting on? What would your top picks be right now?
I hear it. Yes, stock-specific action continues to impress. That has been going on a plenty. So still betting on long positions on Polycab and Skipper. If you see the moves in Polycab, they've been agnostic of what the markets have done. They've not been sharp, big up moves. They've been gradual upticks over the last 4 sessions. In fact, if you dial the clock back about a month or so ago, the stock's not seen any kind of meaningful correction. In fact, it's only gained ground. So 74.30, 7600 are your targets on the upside. 71.20 is where you place that stop loss. The other one is Skipper. This one's had its fair share of volatility, but for the most part, it's respected the 20-day moving average, the 50-day moving average, some of the key technical support zones, and rebounded quite smartly. And today, too, the stock is doing rather well on the back of fairly decent volumes. So 570, 585 are your targets on the upside. 540 is where you keep that stop loss.
Okay. Stay on with us. Aditya Shah also joining in. Aditya, a lot of factors to look at, and one thing that may be on top of mind as well, tell me what you think, is the fact that the US government has now moved the Supreme Court against the federal court, federal appeals court order, which basically said that all of their tariffs were negative or unconstitutional. Do you think that that's one space which is now adding to the uncertainty despite this huge GST boost?
So this GST positivity was already built in on August 20 when the announcements came in. So I don't think that the market will really move when the announcements materialized. Also, the tariff market will cheer when there's a deal reached. What happens in the US is immaterial with respect to the Supreme Court. So from my perspective, the GST cuts are positive. Market's reaction was, market does not react to the news when it actually comes in, it already reacts much before that. So from my perspective, I'm not surprised that the market is be very weakish. The GST cuts are positive for a whole host of sectors, and I'm positive on the markets as well. So nothing to worry about. The deal, when the deal is reached, that is when the real upside of the market will be reached.
So one sec, Aditya, is there anything that you would buy right now in this afternoon session as markets cool off? Are you seeing opportunities there where the full impact of the GST cuts are not priced in?
So as I said, auto sector is one which is going to benefit out of this GST rate cut.
So would you buy auto right now, and what in auto would you buy?
So Mahindra & Mahindra continues to be my top pick there. Mahindra & Mahindra is continuing to do exceptionally well over the period of last 2 to 3 years. The company has seen a massive transformation. That is one of the companies that I'm keenly watching out for. If you look at the auto and something like a Sona BMW or something like a Motherson as well, looks really very interesting. And also looking at the IT sector, the IT sector has been beaten down badly and is getting caught out. So that is another one that is something that I'm watching.
Just stay on with us. An interesting conversation going on right now on NDTV with Amitabh Kant, former Niti Aayog chief, and of course was G20 Sherpa, responding to the GST cuts.
It's seen as a Diwali gift, and you spoke about the consumption, a lot of festive offers coming in there, and a relief for the consumers, particularly the middle class. So do you believe that this will be a big boom for the middle class? And also you mentioned about the tariffs. So is this also a move to balance that impact that India might have with the 50% tariffs and the penalties?
So both the timings are right. You needed to counter the tariffs in a big way. You need to simplify. It's a huge opportunity for India to reform itself. When you're confronted by a 50% tariff by a country which accounts for 26% of the global GDP, where you export almost 90 billion worth of goods, you need to take a vast number of measures, and internal reforms are critical to that. And I think the timing is perfect because it's around the festive season. So the common man will greatly benefit. It'll spread the consumer boom. A lot of household items have now been exempted. There's been a huge amount of rationalization. And I think it'll push for both the consumption story as well as the manufacturing story in a big way.
You spoke about the consumption story, but are there any long-term impacts that you look at, particularly the GDP growth and inflation as a result of these reforms?
Well, for me, the important thing is that we need to accelerate the pace of growth of our economy. We've grown last year at 8.2, this quarter at 7.8%. But the challenge is that you're moving from a 4 trillion to a 30+ trillion dollar economy by the time you become 147. This means that you need to grow at about 8.5 to 9% year after year, consecutively for 3 decades. So you need to carry out reforms in a range of other areas as well. This is a big move forward, I would say, but we also need to implement labor reforms. We need to bring down our interest rates by reduction of SLR rates. We need to implement the budget announcement of urban challenge. The municipal administration and the municipal governance is facing a lot of challenge.
Right.
And therefore, we need to do many, many more things. We need to accelerate the pace of reform. This is a big step forward, but many other announcements made in the budget were also very progressive, and we need to speedily take them forward so that we are able to accelerate the process of creation of jobs in the manufacturing sector and the urban sector. Because long-term consumption story cannot be only through GST. It needs creation of good quality jobs. And good quality jobs will happen when we are able to give a thrust to manufacturing. And manufacturing will happen when we are able to reduce the cost of energy, when we are able to reduce the cost of logistics, and when we are able to reduce, ensure that our entrepreneurs are able to be globally competitive. And all this will require reforms on a day-to-day basis, on a constant basis over a long period of time.
Okay, so that was Amitabh Kant, the former Niti Aayog chief, talking about the big picture and what GST is going to do for you. But remember, right now the markets have cooled off. The GST price cuts, the tax cuts had been priced in to some extent, and it's time for profit booking, but not necessarily for our stock of the day. Netweb Tech is what we're talking about. Samit Sarkar joining us for more. This has been one very interesting buzzer, isn't it? And it has an AI pitch to it.
Yes, a big order win that has come in for the company related to AI. Now the company has bagged an order worth nearly 1,700 crore rupees, and the company here will be supplying servers based on NVIDIA's architecture. So that's a big and a crucial order win that has come in, and that is the reason why the stock has been gaining. Now another interesting part about this order is that this order will be executed between the last quarter of FY26 and the first of FY27, and the management has said that this order win is above the guidance that they have given been given, and this should not, and this order win, which whatever the growth in revenue will be seen, should not be extrapolated. So this order win is over and above the guidance that the management has given. Now, if just to give some idea, if you look at this order number or the order win amount that has come in, that is nearly 100% of what the FY26 revenue estimates was, and 72% of what FY27 revenue estimates were for Netweb Tech. So over and above this number has come in, and this could give you an idea of by how much the revenue could be higher for Netweb for FY26 and for the first half of FY27. A significant uptick in revenue is expected in this period for Netweb Tech. Apart from that, if you look at what brokerages are saying when it comes to Netweb Tech, Equirus has maintained their ad rating or buy rating on the stock with a target price of close to 2,500, and currently the share price has surpassed that target price. So either there could be a hike in the target price or a downgrade that could come in. But what the brokerage is saying here is that they're expecting the margins for this order to be on the lower side compared to what the overall margins come in for the company, given the fact that the order is large in size, and they're also expecting the company's FY25 to FY28 revenue to grow at a CAGR of nearly 79% going forward, and this is including this deal. So a big uptick or a big uptick in the revenue is what is expected. How much of this will translate into the bottom line is something that we need to see at this moment. The stock is trading above the target price that Equirus has given, so it will be interesting to see how the stock moves going forward.
Okay. Netweb is something that you're tracking, Kush?
I am. In fact, if you see the early May series, the move actually started in early May, not just from a price action perspective, from a volume action perspective. There have been these odd weeks ever since where there has been massive volume surge and followed by price up moves. Despite that, if you look at the data set up for the momentum indicators, they are far from overheated territory. So I will actually not be surprised to see the stock actually hit 2,800 and even cross the 3,050 all-time highs that the stock had made sometime last year. So good momentum going, accumulation happening at various intervals. If you've got a position, definitely you should hold on to it. If not, you could still get into it with a stop loss around the 2,400 mark, but for the 3,050 and the newer highs.
In fact, Kush, stay with us. Aditya, a quick question in terms of IT. You did say you are positive on IT as well. But when you talk from a valuation perspective, you're seeing deep discounts from a 5-year perspective on large cap IT, and that's why we were seeing bargain hunting that was happening as well. That's not the scenario with regards to mid cap and small cap IT space. Taking this dynamic into consideration, what would your top picks be from the IT sector?
So within the large cap IT space, HCL Tech and TCS continue to be my one of the picks. Within the mid cap IT space, Tata Tech, L&T Technology, and L&T Infotech, Mindfield continue to be our top picks. So from our perspective, there is going to be a little bit of pain over the period of like 6 to 12 months in the IT sector. But over a period of 3 to 5 years, all these companies should recover as the retail is strong. So from my perspective, short-term problems for most of these companies, but longer term, these companies will continue.
Okay, stay on with us. Swami Sarkar joins in for all the chatter from the dealing rooms. I mean, must be all a buzz today, Swami. Just want to understand that is this profit booking kind of trade that we've seen, because we've cooled off a fair bit by afternoon?
Well, yes, it is profit booking, but apart from that, we also need to understand that despite the positive news flows that have been coming in, FIs are not a buyer in market. So that is also one thing negative, and the reason why they are not buyers in this market is because of the weak earnings that are expected to come in even in the second quarter, and even this boost in consumption that is expected to come in, that it will happen in the second half, and it still remains elusive whether it will be a big boost or not. So hence, I guess FIs are still sitting on the sidelines, and do not be surprised even if FIs are sellers in market today as well. But stocks that remain in focus, firstly, it's Aptus, a big block deal that happened in trade today. Westbridge was the seller that we had indicated earlier, but now dealers are indicating, in fact, they're giving the names of the buyers who are the big buyers in trade today. It was Kotak Mutual Fund, ICICI Mutual Fund, White Oak, among the big buyers is what dealers have indicated. When it comes to IndusInd Bank, the stock is down around 1.5% in trade today, but there are buy flows on large HNI desk at lower levels is what dealers are indicating. They're expecting some kind of a positive announcement, a positive development to happen when it comes to IndusInd Bank. So keep an eye out for that counter. For Kalyan Jewellers, sell flows on mutual fund desk is what dealers are indicating. One of the top mutual fund holder in the company has been selling in trade today is what dealers have indicated. For Trent, the stock has cooled up from days high, but there are still buy flows on FI desk for Trent, so keep an eye out for that counter. M&M, there are sell flows seen at high level. The stock is up around 6% but there are sell flows at high level. Post GST cut, dealers are saying that peer companies or peer OEMs are better off at this moment compared to M&M, and hence there are some sell flows that they are seeing. For Motherson Sumi and Wiring, buy flows are seen on large HNI desk on expectation of some positive announcement here. And lastly, SG Mart, a big block deal happened here in trade today. Around 3.5 million shares changed hand. The name of the seller is still not known, but among buyers, dealers are indicating that SBI Mutual Fund could be one of the buyers in trade for SG Mart. So keep an eye out for that counter as well.
Interesting names, and 9.5% up move coming in terms of SG Mart, and I think majority of the action is coming in names which are beneficiaries in the form of GST as well. So I think there is some bit of alignment with the HNI desks and what's happening in the markets, though your markets are not really mirroring that because you're seeing profit booking right now, but probably this will come in the next couple of trading sessions.
Yeah, I think you have to position yourself cleverly right now. Kosh, I wonder where you are leaning. Do you think that this is a lull coming in what will be a broader bull run, or do you think that we're going to move in the negative direction from here on? What would you do? What is the position that you take right now for tomorrow's trade?
I would sit out, and for a very simple reason. The reason is that we're right now bang in the middle of that range of 24,400 and 25,000. Give or take. Now, my concern is while what's happened is definitely fantastic. Kudos to government. There are three spaces that move the market. One is banking, the other is IT, and the third one is Reliance. In its own. No major impact in all three of them today in a big way. So unless I see any kind of traction in those spaces, I think it'll be difficult for Nifty to give you a very sustained up move, and hence my concern around the 25,000 mark being a near-term resistance. One thing that could happen is a short covering rally, but that remains elusive. So I don't want to predict that. So right now I would sit out Nifty. What we are doing, however, Tamanna, is that we're playing indices by the day. So the trend of the day for very short intraday plays, that's what we've been recommending our client. But positionally, right now, Nifty at the moment is very directionless.
Absolutely, very directionless is what Nifty is looking like, and similar is the trend in terms of Bank Nifty as well. But let's stay with us, Aditya and Kush as well. Let's again cut across to our colleague Mahima, who's in conversation with Jayan Baheti, President at Sanatan Textile and member of the Retail Association of India. Mahima, over to you.
Right, so Hiral, as you rightly mentioned, I'm here with Jayan Baheti, who is the president of Sanatan Textiles and also a member of Retail Association. I was trying to have a conversation with him to understand as to what this GST 2.0 means for the entire retail space. Mr. Baheti, I'll come to you and firstly ask you as to how is this being viewed by the Retail Association when it comes to the consumer durable space, to be specific?
At the onset, I would like to thank Prime Minister and GST Council for carrying out a big reform, which will boost up our demand for the consumers and at lower cost. And it's a festival season going ahead, so they have done this at the right time so that demand will definitely boost up and consumers will be happy and we shall be happy because our goods will be sold more.
Absolutely. Just give us a perspective as to how much of an uptick are you expecting in terms of demand, overall growth. What is the kind of growth that you're penciling in terms of percentage? Any idea if you can give a rough range of growth and demand that you will be able to see because of this GST boost?
It will be to quantify, it will be too early, but it will definitely, demand will increase by not less than 20 to 30%. Immediately, and it's a festive season, so I think December quarter and September quarter will be fabulous for the industry and the sector, especially the garment and textile which I am representing. So people are just waiting for the notification so the duty gets passed on to them.
Absolutely, I think, and garment is one industry which, where you see demand being very elastic, correct? And because of that, I think garment sector is also set to benefit because of this GST 2.0. Just want to understand as to what's the view of the entire association when it comes to garment as a sector?
Yeah, it will definitely boost up the garment sector, and it will neutralize the tariff that has been imposed by Trump government. So we are also looking forward to a boost of demand, and already inquiries have started and bookings have started for the September quarter and end.
Do you think it will completely neutralize the kind of tariffs that are anticipated to be imposed because of the GST 2.0?
Not completely, but to an extent.
To an extent, okay, understood.
And it will take some time to completely neutralize it. But what happened, unfortunately, government has missed some leg in this. Like we are the MFF manufacturers. So we still stuck up in the duty inverted structure. And unfortunately, earlier the gap was 6%, now it has increased to 13%. And though pent-up demand is there from the retail sector and all this, but for us to take the manufacturing expansion, our duty gets stuck in the capital goods.
Right.
So that we are not getting the benefit.
Understood, all right.
So I think before 22nd September, the government may take this correction and neutralize everything and make it, and it is revenue neutral because already they are giving us the refunds.
Right, okay. All right, so that's the view with regards to where the retail associations and that's the move. I mean, it's very much appreciated, this particular move by the by the government for GST 2.0. Back to you, Tamanna.
Thank you for that, Mahima. So interesting to see those ground reports as well, because this is more than a one-day trade story, and that will possibly see the ups and downs that markets usually do. But, this conversation that we had, and exclusively with Ramdev Agarwal, is an important one. He was speaking with our very own Neeraj Shah and said that we're going to see a very positive second half.
So obviously it is coming from PMO or PM himself that he is keen, because this level of the complexity, the size, it can be done only with the push coming from the big office. Okay, so that has happened. And they've done it very fast. In fact, faster than we thought that it would be third and fourth, and maybe fourth night tonight it would have come. But third only they finished the meeting and kind of announced. So I think they're also in a hurry. And only thing I couldn't understand is why it is 22nd September. Why there is a gap? Or you do the meeting only on 21st September. I don't know. There must be some bureaucracy or something. So anyway, I think it's big. And I think it will take time for the market to digest. It's so big that it will take time to digest. And maybe people are much more focused on what happens September quarter. And then let me see the demand and all. So I did one thing. I did only research. I called up one of the dealers. And incidentally, he's the dealer for Maruti, TVS, Hero MotoCorp. So he's a guy who understands. Auto. He said, boss, most likely we will not be able to supply the demand surge which is going to happen because of this. That's wow. So now we have to interpret we have to go and ask many guys. The companies guys will have less feel than the dealers. So I think I think there are 3-4 factors. It's a Lollapalooza effect in the sense that one is the credit flow. Okay, because we killed the momentum last year by bringing down the credit flow from 17-18% to 8-9%. You can't grow this economy at 11-12% if your credit flow is 8-9%. No way. Right. I don't know, whatever was the economic logic for that, they would know, the regulators would know. But now even FM and government wants the credit flow to increase. And inflation, which was the main problem, that is also well under control. So now we have a credit flow, we have liquidity flow with the CR cut, and then now you have the GST cut. So all three have come together, and there is a push from the whatever power that be, regulators and everybody, to push the economy forward. So I think all the three things, the rate cut, flow cut, the availability of liquidity, and now GST. I think we are going to see the second half, and now bumper monsoon also. So there are a lot of factors which are coming together. I would think that, and then first quarter GDP growth of 7.8%. I don't know how much extrapolatable it is, but it's a good news. Yeah. At least all the economists are wrong. So what I'm saying is we are sitting on something very good, and it can't get any better. And I only hope that there are no I mean, there is no, we will not get, because some of the guys I was talking to yesterday in my conference, and they were saying, sir, we are hearing that they are going to tinker with the input credits, and also I only hope there is no hidden, kind of in this to cut the thing, and the impact, the revenue impact they're talking about is 45,000 crores for the current year. So it must be obviously to do with the second half. So the total impact on annualized basis would be 90,000 crores. I'm quite sure if, even if this is the level of impact of 90,000 lakh crore relief, we have not seen ever. So, but it will have a huge, multiplier effect, and I think the bounce in the volume bulk of it will be covered in 1 year, 1.5 years. I would think so. If the credit, apart from the GST cut, credit flow is very important. They must make sure that credit is available in the economy, and it is the cost of credit is also important.
Right.
So they should also hammer the system that nobody should profiteer out of this.
Yeah.
Everything should be, every drop of it must go to the consumer.
Right.
So that is very important, and I think it will happen because competition is enough in the system. Banks are cutting each other. Now NBFCs will do very well, so there would be competition out there. But NBFCs, to get the liability so that they can disburse, that has to be again the bank. So I think banks have a major role to play to make this GST rollout successful, because it's not because if you cut the price, but if you don't give me credit, again things will not happen.
That's true.
So combination of credit and affordability, it should do wonder.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you. Green Talk Social Impact Awards 2025, coming soon.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio.
Welcome back. You're watching India Market Close, and markets are beating the retreat for the afternoon session in trade, giving up most gains, but staying at least in positive territory at the very least. So not too negative there in terms of sentiment. In fact, let's get a technical check very quickly. Rajesh Palvia joining in now on this leg of the conversation. Rajesh, great to have you on as always. Are you seeing an opportunity in this sort of slump that we've seen on the Nifty?
Good afternoon. So, market is still, witnessing supply pressure at a higher level as call writers are still very much confident at 25,000 strike as well as 24,900 strike. So, that level needs to cross. But the kind of reform which is announced last night, I think, yes, going forward, market will find a upward trajectory again, and we may see a breakout about 24,900, and then possible rally can extend further also. Though we are still stuck in the broad consolidation range, 24,500 on the downside and 25,000 on the higher side, and we are swinging in this range only since last couple of weeks. So, but still looking at the uncertainty towards the global, cues like, the tariff kind of thing are still there in the market. So that uncertainty is still giving some bit of cautious to the market. But the sectors where the clear benefit of this GST is going to takes place, they are still holding the ground. The sector like automobile, sector like FMCG, new age stocks, and other sector like even we have seen some buying action in NBFC space also in today's session. So I think these sectors can do well in the coming days. But yes, the missing part is banking is not contributing to this really. Still struggling to cross its major supply zone of 54,300, 400 zone, which is having major call concentration area. So Bank Nifty, there is a contribution is missing from the banking stock. So that's the challenge for Nifty to, continue furthermore upward trajectory. So I think some consolidation in benchmark would be there in range of 24,650 to 24,800 for some more time. And then once we again get the breakout about 24,800, 850 zone, then rally extension of rally would be there.
Right. That's interesting. In fact, one name I want to highlight with the Bajaj Finance is a HDFC Bank. Because HDFC Bank also has been getting into that consumer loan business in a big way. They are one of the financiers when you go to a ICA as well. So a lot of overlap in terms of business with the Bajaj Finance, and probably that's what is being reflected as well. It is one of the contributors to today's day of trade. But Rajesh, in this market then, from what we are seeing right now, what would you put your bets on?
So again, you already pointed out on the Bajaj Finance, and that's my pick for this hour. The way stock managed to give breakout on the weekly chart, if we analyze the weekly structure, stock managed to give breakout of falling trend line on a weekly chart. Stock is comfortably holding about to all its near-term, short-term moving averages. So Bajaj Finance is looking promising. Breakout is indicating that this momentum can extend further. 965 to 970 we are projecting target. On the downside, 910 needs to keep as a stop loss. Another breakout stock that we are observing here is KEI Industry. Again here, if we analyze the weekly structure, stock managed to give breakout of 7-8 week consolidation range. The data is also on the positive side. Long built up is there. So we are projecting target of 40-100 for KEI Industry. On the downside, one can place a stop loss towards 4085.
Okay. Aditya, in terms of any of the NBFCs, what would you look at right now? You're on mute. You're on mute.
So on the NBFCs, I have already said microfinance NBFCs look good for me. So for example, Arman Financial or Small Finance Bank or Jeevan Small Finance Bank look interesting. Of course, but companies like Bajaj Finance continue to be a top pick. Where they are going to benefit from the consumer loans that are going to increase as a result of this GST rate cut. So consumer financing companies as well as microfinance companies is something that you need to watch out.
Okay. In fact, let's also get a view. Venkatesh Balasubramaniam, MD and Head of Research, JM Financial Institutional Securities, is joining us right now for more on what we've seen today. Venkatesh, hi, great to have you on. First view on why you think the mood is fizzled in this sense. Is this just profit booking, or is there a concern that we've not yet seen?
Firstly, good afternoon, and thank you for having me on your show. Now, see, the reason it might have fizzled out is a lot of people might have already been positioned. I mean, after Prime Minister Modi's speech, we all already knew that some of these provisions would actually play out. So actually, if you see as a lead up to today, there was already a run up in a lot of auto and consumer stocks. So a certain part of the positives are already priced in before the whole thing actually played out.
Okay, so in that sense, yes, some of this was priced in, but what we've been hearing is that the entire impact is yet to play out on balance sheets, on consumption, on the overall economic boost. How would you buy into that from an equity perspective today?
Okay. So, as you rightly pointed out, first of all, it has to be implemented from September 22nd.
Yeah.
Actually, the current quarter might not be very good because a lot of people have postponed their purchases expecting a GST cut. So, whatever impact you will see, you will start seeing from the next quarter, which is the third quarter. Now, the right way, according to us, is to position yourself, is to look at consumer stocks. And that is why in our model portfolio, which we put out a couple of days back, we have gone overweight on consumption related sectors. So our biggest overweight is actually automobiles, where we are almost 203 bips overweight vis-a-vis the Nifty. We have also gone overweight on a couple of consumption related internet stocks, basically Nykaa and Eternal. We are also overweight on consumer staples, consumer durables to some extent, and retailing. GST benefits will also flow in into the cement sector. So cement, we are expecting that once the new GST rules are implemented, initially most companies will cut prices, but progressively over the next 6 months, we are expecting them to take the prices back up and take the benefit in the form of higher EBITDA margins. So cement is another way you could play this. We were already positive on real estate and hotels. That view remains. Where we are a little worried is on the negative side. We believe these GST cuts and along with the direct tax cuts which happened in the month of February, it will reduce your fiscal space. Now, if your fiscal space reduces, I believe whether it finally happens or not, sentiment around infrastructure capex and sentiment around defense capex could come off, and that could actually lead to a correction in some of these stocks. And I think some of that is already playing out today. If you see some of the defense names like Bharat Electronics or HAL, I think they have started coming off already.
Venkatesh, good afternoon. Hiral, this side, an important point that you make is you're negative on infra and defense capex. Does this mean that's the reason why you're seeing some bit of profit booking today as well? Because the revenue loss from GST reforms would restrict the fiscal space then?
Yeah, precisely. So as I was mentioning, that could make it a little tougher on infra names. We still have to see how the government does the balancing act. Do they cut infra capex? Infra capex is slightly easier to cut because it's a much bigger number. Defense capex per se is a small number, so it is not actually advisable to cut it. Given our recent conflict with our neighbor, so it's not something advisable to cut. But overall, I think you could see a derating in infra, defense, ports, power utilities. You will see a derating in these sectors as people sell to create funds to buy consumption related themes. So consumption was a sector. Besides internet, I don't think any of the other consumption sectors were performing over the last 6 to 9 months. So we will see funds moving out of these names, infrastructure related names, to the consumption sector, which could cause some of these stocks to underperform over the near future.
What would be your top pick or your favorite in your consumption basket?
So we like quite a few. Honestly speaking, you can pick whatever you feel like. It's not just a few. You can pick many. In auto, for example, we love Mahindra and Mahindra at this point in time. We love Hero. We love TVS. We love Maruti. This would be our four best names in auto. And I think all of them should do very well over the next 6 to 12 months as the GST benefits flow through. On the consumer staples, we really like Britannia and we like Hindustan Lever. These are two names which we like. We also like Titan a lot because I think Titan has the added benefit of benefiting from higher gold prices. So Titan should actually do very well going forward. We like one consumer. Honestly speaking, GST should be very beneficial for the AC names, because GST rates have been cut from 28% to 18%. But there is there is just too much inventory in the channel because the summer has been a total washout. So we don't expect Blue Star and Voltas to actually perform. We don't expect Havells to perform over the near term. We would advise investors, you would be better off holding something like Polycab or KEI. Some of the wires and cables names where even though they are not benefiting per se from GST, those names should do very well going forward.
Yep. Thank you so much, Venkatesh, for speaking with us. And we were talking about auto, and I like that thought that whatever you pick in auto is going to do well. In fact, Harsh Saita is at a Volkswagen showroom in Mumbai right now in conversation with Amar Jatin Sheth, who's secretary of the Federation of Dealers.
Well, yes. So I have with me Mr. Amar and Mr. Sheth. So firstly, you represent FADA. So give us a perspective on the gravity of this cut in GST. How large do you think it is, and what's the likely impact on demand that you're foreseeing?
So we at FADA, I think, are extremely excited about this. We think it is a watershed moment, and it is something that is going to give a huge fillip to the demand situation across segments. I mean, it's not only small cars, it's also larger cars, two-wheelers, tractors. Everything is going to be seeing a large demand is what we feel. This year, to answer your question on demand, was anticipated to be around a 5% growth in auto sales. The first from April till now, till August, wasn't even there. So we were banking a lot on the second half and the festive season to catch up. But it wasn't going that well. But I think now with this cut, we should be far ahead of that 5%. I am thinking we should be doubling that at least.
Got it. And is there a little more excitement from a customer standpoint? Is that what is visible to you?
Yes, absolutely. I think since 10 p.m. last night till now, all of us at the showroom are extremely busy. All of us are excited to cater to this demand. So it is a large uptick that is going to come our way.
Mr. Sheth, possibly one negative is the cess. The compensatory cess, and this is for viewer perspective, that there is that cars are levied not just with GST but are also saddled with a cess, and the knockoff of that cess for car dealerships is only against cess. And now with cess completely abolished and only GST now as part of the new regime, what happens to the existing cess, sir? Is that a concern in your opinion? Are you in conversation with the government with regard to this? Give us that perspective.
So you picked the right now. I think there are two things which are, from an auto dealer perspective, which would still be on our wish list. One is this clarity on compensation cess, and the other is a 350cc and above motorcycle, which is going to a range which is higher than what it currently was. So on the cess, yes, it is, you're absolutely right. A cess can be set off only against cess. A cess can be abolished by the GST Council. But if that cess is to be set off against an IGST or anything else, it needs parliamentary approval. So I think we are hoping that today's day of the GST Council meet will throw more light on this. Okay. But it is otherwise an area of concern.
Got it. And this will be obviously an area of concern for all dealerships, listed or otherwise. So something to keep your eye out on. But thank you so much, sir. This is great insights. And of course, you seem pretty bullish. So 5% was what was penciled in. Can we expect 10% plus this year in terms of growth?
I think we should be close to that 10%, because also the bigger fillip is the smaller cars is now much more attractive, which was again a segment that wasn't performing that well. So I think that is going to do well, and disposable income in people's hand, because GST cut across all other things also will give them more money to spend.
Excellent. So you heard it, smaller cars and 10% plus growth. With that, back to you in the studio.
I think we should send Harsh more often out. He's really excited in that dealer and looking at his next car out there. Rajesh Palvia, have you identified your next car?
Not now.
completely out of syllabus question. But nevertheless, can you at least identify what stocks we should look at? What are the BTST ideas for trade tomorrow? Because right now we're seeing a bit of a slump. But do you think that this is going to last? Is this an opportunity to build positions?
Yeah, definitely. So I think market is, showing still a sign of buying interest, though we have slipped from the higher level. But I think stock-specific action is going to continue in the market. I think FMCG is the pack where we still feel that, a more upward momentum is going to happen. So Colgate is looking very promising. Though from higher level, there is a mild profit taking, but still the way stock managed to give breakout, I think this stock is looking promising for BTST point of view as well as for the short term trade also. So for BTST, we are projecting target of 24.90, 25.10 on the downside. 2430 needs to be keep as a stop loss. And another stock where we are focusing fresh breakout is Sirma is looking attractive. The way stock managed to give breakout on a daily, weekly time frame, and again now stock is moved back to a new all-time high trajectory. A strong buying action throughout the day. So Sirma SGS is looking attractive. We are projecting target of 870. On the downside, one can keep a stop loss towards 815.
5 on the downside, Sirma SGS at the day's highest levels as we speak. Stay with us, Rajesh. In fact, we have Deepan Mehta, founder, director at Elixir Equities, also joining in. Deepan, welcome to the show and always a pleasure to speak to you. The way the markets are seeing profit booking in today's session, what are you picking up? Because we've seen tax cuts that have come in, we have rate cuts also that have come in, and now you're talking about GST. Do you think the markets are now waiting for that reflection to happen from an earnings perspective, and the overhang with tariffs remain, and hence some consolidation and range-bound movement from here on?
See, basically, we have this syndrome called sell-on news. And that's exactly what is happening over here, that all of the GST cuts were largely factored in because the government had, built those expectations. And we had seen announcements come in that line as well. And a lot of analysis had already been done on who are the beneficiaries in the sector and everything. So what we are seeing is kind of a sell-on news kind of a syndrome. It's very common in the market. But there's no denying the fact that these cuts are massive. And it will have a very good effect on corporate earnings going ahead. And I think that from this point on, the government has done everything it could and has put the ball in the court of the corporates. And I think eventually, if the earnings do look up because of all the various steps taken, then the markets can go back to its old highs. Otherwise, I think it will remain over here because at the end of the day, a lot of liquidity is still coming in. And that will prevent the markets from going down.
Deepan, you will build a hypothesis for the same, right? Are you a buyer currently with the hypothesis that things will improve and therefore these are the times to buy? And if so, where?
Yeah, Neeraj, we are working harder than ever before to find stocks because I think that the worst is over. The worst about Trump tariffs is over and done with. The worst about geopolitical events is over and done with. And, there's so much of certainty now. Few months ago, there was uncertainty with Trump and Ukraine and Israel and monsoon. Now everything is behind us. We are playing a scene game over here. And it's only a matter of time before earnings pick up. And also at some point of time, base effect will come into play. End of the day, the GDP is still growing at near about 10% nominal growth rate. So I think earnings will come through. So I think the worst is over and we should look for much more positive trends going forward.
Okay.
What would be your key picks, Deepan? Your top favorites over here? Would you look at IT banking as a contrarian play since everyone's looking at consumption right now and GST boost?
If you ask me, the best consumption play is an NBFC like Bajaj Finance, which is India's largest consumer finance company. A matter of disclosure, we and our clients have shares in the company, own shares in the company, so our views are biased. But, I think if demand for automobiles, demand for appliances, big ticket appliances is going to go up, then definitely all of these are being purchased on EMI. So that may give some decent fillip to volumes of a company like Bajaj Finance. So that's one nice play on the entire GST cut and rising consumption investment theme. Other than that, the second winners we feel are the low cost or the low ticket retailers, like, something like a V2 Retail or a Vishal Mega Mart, maybe even Trent. The Zudio is, of course, certainly entry level or I would say value merchandising. So companies like that also will benefit from GST because of a cut which has gone from, I think, 12% to 5%. So those will benefit. Company like Bata can benefit. And lower ticket items like that in apparels and in shoes and accessories can certainly benefit from GST.
Okay, thank you so much for that, Deepan. By the way, Deepan talked about Bajaj Finance with all of those disclosures, but since this morning, I think I have now lost count of how many analysts have come on air, fundamental and technical, and talked about Bajaj Finance. So you're in good company. I mean, I'm wondering what the alternatives to Bajaj Finance are.
It still becomes HDFC Bank as well, because they are also growing that book in a big way, where they are providing a lot of consumption loans to companies with IKEA. They have already done their partnerships there. So I think that's the reason why you're seeing that mild rub-off effect on a HDFC as well today.
I mean, really mild at this point with the rest of the markets. I mean, at one point I saw the Nifty dip into red. Just want to quickly check if we're still there. Because we're definitely not holding on to gains.
But I'm just thinking, right, and borrowing just simply from Ramdev Agrawal's conversation, that maybe the market's saying that, okay, it is happening from September 22nd, maybe this quarter will have some pain, etc. Let's wait for a little bit, and once the consumption party starts, will it really stop? I think that is the call. So I don't know, somehow I'm not perturbed. We know that Tamanna was more bullish than me in the last few days, right? Somehow I'm not perturbed with this movement today from the highs of the day. It's okay.
For some reason, the Supreme Court of the United States has joined my list of reasons to be bullish. Let's see. I'm waiting to see if there's any commentary overnight as the US government moves them. But let me go across now for our segment where we give you intelligence on what to expect the next day. Samit Sarkar joins us once again.
Well, in a surprising move, what the government of India has done is that they have increased the GST on the services that is rendered for exploration of and production of oil and gas services, and these taxes have been increased to around 18% from around 12% which was there earlier. So clear hike of 6 percentage points. Now, which are those services that are included here? It includes a seismic surveys, geological and geophysical data analysis, drilling operations, mine planning, and other professional and technical services. Now, most of the items that are included here, most of this are part of the capital expenditure for any oil exploration and gas exploration companies. So the companies or listed companies that come into impact here is ONGC and Oil India. Now, for their capital expenditure, most of the capital expenditure is related to these items, and that will see a higher GST rate now going forward. Moreover, both ONGC and Oil India cannot claim an input tax credit for these services, given the fact that the product that they are selling is not under the GST ambit, so they can't even claim the input tax credit, which means that their overall cost for these items is expected to increase now going forward. Now, if you look at the capital expenditure that ONGC has planned for FY26, that number stands at around 35,000 crore rupees. And mostly on the entire of this capital expenditure, this GST rate has been increased to around 18% from 12%. For Oil India, this amount stands at around 8,000 crore rupees. So what will be the additional impact of capex that will come in for ONGC? It's close to 2,931 crore rupees. So that is the additional cost that they have to now bear. But this cost will go into the balance sheet and not into the P&L. On the P&L side, the total OPEX stands at around 13,900 crore rupees, and the additional cost that they have to bear is around 830 odd crore rupees in a financial year. Now, for Oil India, if you look at their total OPEX stands at close to 2,300, so the additional cost is 140, and their capital expenditure plan is close to 8,000 crore, which means that the impact of GST which will go into the balance sheet is close to 620 crore rupees. So on the EBITDA front, right now the impact could be around 1.3% for ONGC, and for Oil India it is expected to be around 1.8%. But on the bottom line front, the cost could be much higher, given the fact that depreciation will also increase for both the companies, which will also shave off a lot of part of their bottom line. So we could continue to see weakness in ONGC and Oil India even going forward, given the fact that not even we are seeing a big move in the oil prices. Oil has continued to remain below $70 per barrel, and this now additional cost has will start to kick in from the second half of this financial year.
Absolutely. Costs are going up over here, Tamanna, and I think this is one sector which is categorically seeing that negative reaction, and that's the profit intelligence we get for the viewers.
Yeah. Stay tuned for this new offering that we have where, we try and get you all set for the next day as well. Rajesh, as we wrap up, what is your top picks that you're looking at to going into trade tomorrow? And seeing that we're probably ending, maybe losing all the gains today on the Nifty as well, and deeper down actually in the broader markets.
So Tamanna, for BTST point of view, again, the stocks from the new age segment is looking attractive. Nykaa is looking promising. Stock managed to view breakout of its previous swing high of August 2024. So almost 1 year consolidation range breakout is already taken place in Nykaa. I think this stock has potential to continue furthermore upside 248 where we are projecting target for Nykaa. On the downside 234 needs to keep as a stop loss. Again from the same segment, Eternal is also showing sign of strength. So I think these new age stocks are looking promising, and I think the way most of the stocks have shown buying interest in last couple of weeks, I think we could see further more traction in this segment.
Rajesh, just very quickly, one last thing. Is this disturbing you, the fall from the highs of the day? Or would you believe it is in the stride, and as long as it's holding some key levels, the markets may still be in a zone or a trend or something?
Yeah, certainly, because again, the kind of announcement which has happened, I think market should give breakout over 25,000 level. But again, this is again surprising factor. So it shows that there is something giving a cautious approach to the market, which still market is expecting from. Maybe it could be from the Trump side. Maybe market is worrying about what kind of announcement they can make. So that is disturbing the market at this juncture. But overall, if we look at the structure, there is no as such major dent. But yes, we have already given the gain. That's the really disturbing for a factor, especially for intraday point of view.
Okay, thank you so much for joining us today, Rajesh Palvia there. Right, I mean, at least we're not closing in the red. If we're looking at any kind of silver lining there, let's pull up the markets. Just a couple of minutes to go. I hope we don't close in the red. Just 20 points left. All of the gains of the day shaved off. The bank Nifty completely flat. The broader markets looking even worse. Let's pull up the intraday charts, the line graphs for the Nifty, the bank Nifty, as well as for the mid cap and small cap, because you see the pain there, completely giving up all its gains close to the
GST cuts
of the day
on the market.
So this is after 18%.
This was 18% inclusive.
This is inclusive of 18%. Yeah, some. I don't know if you should look at this as a discount on stocks that you could buy. That's one way of looking at it. Broader indices. Let's pull up the broader indices, please, and just look at what's happening with mid cap 150 as well as the small cap 250 as well. 0.75% down right now, and just the heat map very quickly. I mean, I'm guessing M&M still pretty much up there. M&M and Bajaj Finance.
Yep. And then there's, more red than green, yes. And I think the key takeaway today, Tamanna, for me is that the market realized that while insurance companies were saying that, we will get over it because of volumes, somehow at least the market may not be believing that, and which is why HDFC Life tops the list out there. The interesting piece is those stocks like Tata Consumer and some others, because there the input costs as well of their raw material has gone down quite a bit. GST has gone down there. So it's very interesting to see the kind of profit booking that has happened there on Maruti. This has to be selling the news after buying it over the last, whatever,
But
1-2
that's
weeks.
for some reason, M&M and Bajaj Finance are completely unscathed.
Because M&M that Friday wherein it got shaved off, because you remember they were saying that 20% ke upar hoga.
But we saw a recovery yesterday as well. But then
did.
today, I think to the extent of which it has helped and across the board has really boosted an M&M coming in. I just want to pull up the advanced decline ratio as well, if you can do that very quickly. And just take a look at where we're ending this gap fairly wide and widening at the worst point of the day. You might have some opportunities to come and buy tomorrow, but you'll have to really wait and see. Top gainers and losers before we wrap up, and I reckon you're going to see consumption, at least on Neeraj's side of the screen, all consumption. on Bridge's side of the screen. Here,
It is all consumption actually.
It's all consumption. Look at it.
It's all
Anything you think of.
Everything is consumption.
That you would need in your daily life.
Including
broadly.
finance.
Definitely finance. Okay, is on that side of the screen. Here, what you do not need in your daily life, and maybe that's why it's now taxed at 40%.
You mean sugar as well?
I agree. Sugar as well, I agree. But Delta Corp, because now entry to a casino is now taxed at 40%, just the entry. So Delta Corp hurting. Sugar, yes, only from the point of view of, keeping your health in check. And maybe some profit booking there. Even defense has seen a fair bit of hit in data patterns showing it there as well.
But net, it's okay. It's not turned out to be a special day of trade, but it's fine. I mean, now let's see if indeed we maintain these levels until September 21st, 22nd.
Yeah.
And then when the real spark comes.
I would say it is disappointing though, Neeraj. I mean, I'm optimistic at most times, but this is disappointing because you would not think that this extent of profit booking would come in. I think we'll have to wait and watch.
Is the performance disappointing? Yes, it shouldn't have, but it's not perturbing. Let's put it that way. Somehow I think that it's fine.
I don't know if you will see another leg of GST push right now. Maybe closer to the last week of September like you're talking about. But for now, this seems to be the story which has started and ended in a day. We'll set you up for trade tomorrow, of course. So much happening, and you should look at some of those factors that you will see going into trade tomorrow. Those will be important from a global market perspective as well. We'll see if the US Supreme Court says anything at all on that hearing where the government is going and appealing against a lower court on tariffs. So all of that. But for now, that's all the time from Neeraj Mia and the team that put the show together. Thank you so much for watching. Stay tuned. Market Express up next.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you. Green Talk Social Impact Awards 2025, coming soon.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in?
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So viewers, GST Council's Diwali Dhamaka has helped the benchmarks notch a good session today. Nifty managed to end the day above 24,700 levels. Sensex also jumped more than 170 points. Advanced decline ratio was tilted in favor of the declines. The sectoral picture was mixed. Defense, PSU, bank and IT were the top losers. Auto, consumption and finance were the top gainers. M&M, Bajaj Finance and ICICI Bank were the top contributors. A festive season win for the auto sector. Tractors now face a reduced GST of 5% from 12%. Now this is boosting the affordability for brands like Mahindra and Mahindra. Small petrol cars under 1200cc and diesel cars under 1500cc, both up to 4 meters, which has dropped from 28% to 18%, benefiting Maruti and Hyundai. Now, two-wheelers up to 350cc also see a GST cut from 28% to 18%, helping Hero Moto and Bajaj Auto. However, luxury cars now face a 40% GST, but the cess gone, so they are slightly cheaper. A big boost for construction this festive season. The GST Council has slashed the GST rate on cement from 28% to 18% under the new two-slab system. Now, this cut is expected to lower the cement prices by 25 to 30 rupees per bag. Anti-profiteering rules ensure that these savings reach customers. The industry, including giants like Ultratech and Ambuja, stands to gain as they can now implement price hikes more effectively. So dealers might keep low inventory during this transition. A game changer for affordable insurance this festive season. The GST Council has scrapped the 18% GST on health and life insurance premiums effective September 22. So previously, customers paid 118 rupees including the tax, but now expect a 18 rupee discount, bringing costs down by 15%. Now this could spark higher demand as volumes are likely elastic. Reinsurance also gets a GST exemption, boosting the sector. So companies like LIC and ICICI Prudential are set to benefit. Big relief when it comes to healthcare as well. So GST Council has cut the GST on medicines from 12% to 5% effective September 22. Now select high-value medicines now face zero GST, which is down from 12%. Now the inverted duty structure persists with the APIs at 18% and also finished products at 5%. So a new GST refund process for unutilized credits will ease the working capital for pharma firms. Companies like Sun Pharma and Cipla stand to benefit. Not just medicines, the GST revamp is a game changer for healthcare hospitals and diagnostic firms as well. So these firms now exempt from charging GST on services. Previously, they paid 5%, 12% or even 18% GST on inputs like equipment and consumables, which couldn't be reclaimed. So most inputs have shifted from 12% to 5% GST, delivering 7% cost saving. So this could boost EBITDA margins by 100 to 150 basis points. The GST Council has slashed rates on consumer durables like air conditioners, dishwashers and TVs above 32 inches from 28% to 18% effective September 22. Now this move is set to lower the prices by 8 to 10%, now making these appliances more affordable. So companies like Blue Star, Voltas and Symphony are poised to benefit as demand surges. The simplified two-slab GST structure also aims to boost festive sales and ease the tax burden on consumers. A major boost for travelers. The GST Council has slashed GST on hotel rooms with tariffs up to 7,500 rupee per day from 12% to 5% effective September 22. Now this applies without input tax credit, making stays more affordable for budget and mid-market travelers. So industry leaders like Radisson and FHRAI says that this will drive domestic tourism, also increase the occupancy and boost India's hospitality sector. So beneficiaries include chains like Radisson, Taj and Lemon Tree. Macquarie has initiated coverage on Keynes Tech with an outperform rating, seeing further upside despite its lofty 146 times price to earnings multiple. Now, the electronic manufacturing services firm trading at 6,780 rupees benefits from a massive $1 trillion global EDSM opportunity. Now, the key drivers include aggressive international expansion, backward integration, and also value-added services like ODM and OSAT facilities. So, a recent 1,600 crore rupees of capital raise provides dry powder for acceleration. Now, while PM Modi's mention of its Gujarat chip plant boosts the prospects, Macquarie targets 7,700 rupees, implying 14% upside, with revenue projected to hit around 9,000 crore rupees in 3 years. Electronic Smart India shares have risen for the 5th consecutive day between an intraday high of 155.65 rupees and also a low of 134.9 rupees. The stock has witnessed exceptionally high trading volumes with over 5.46 million shares traded, a surge of 4,627.95% compared to its 5-day average of about 1,15,590 shares. Now, the previous session saw the shares close up 4.10% and also at rupees 130.75. The stock recently hit a 52-week high of 225 rupees and a low of 110 rupees. Currently, it's trading at 31.58% below its high, but nearly 40% above its low. So, market capitalization stands around 5,923 crore rupees. Max Financial Services shares plummeted 3.50% to 1,560 rupees. Now, this is marking the steepest single-day drop in 9 months amid broader market volatility. The stock hit an intraday low of 1,560 rupees after touching a high of around 1,650 rupees. So, with trading volume surging 129% to 1,254 shares against a 5-day average of 5,435. Now, this follows a modest 0.46% decline to 1,616 rupees in the prior session. The 52-week range stands at 1,678, high on August 26, and also 972 rupees, which is low on March 4th. So, leaving the stock 7.08% below its peak and also 60.4% above the trough. Now, market capitalization is at 53,837.9 crore rupees. Ramco Cements has commissioned an 8-megawatt waste heat recovery system at its Ramasamy Rajanagar cement plant in Virudhi Nagar, Tamil Nadu, enhancing the sustainable power generation. Now, this addition elevates the plant's WHR capacity from 2 megawatt to 10 megawatt, while the company's total WHR power generation surges to 53.15 megawatt from 45.15 megawatt. Now, the move aligns with Ramco's green initiatives, reducing the reliance on conventional energy and also cutting emissions amid plans for further expansions. Earlier, a 2 megawatt WHR turbine was also added at Alathiyur in January 2025. The commissioning supports India's push for eco-friendly cement production, with Ramco targeting 68 megawatt overall WHR by FY26. Now, shares have risen 1.2% on the news, reflecting investor confidence in the firm's sustainability efforts. Bharat Heavy Electricals has secured a significant order worth rupees 2,600 crore rupees from MB Power for the supply of key equipment, including a boiler, turbine, and also a generator for the 1 into 800 megawatt, that is 800 megawatt Anupur thermal power project. Now, the project uses supercritical technology aiming for higher efficiency and also reduced emissions. Now, the boiler will be manufactured at BHEL's Trichy plant, while the turbine and generator will be produced at the Haridwar plant. Now, the supply is scheduled to be completed within 58 months. Now, this order reinforces BHEL's prominence in India's power equipment sector. Food delivery giant Swiggy has hiked its platform fee to 15 rupee per order, which is its highest ever, and the third increase in 3 weeks, to capitalize on surging festive season demand and bolster the profitability. So the fee separate from delivery charges, GST and restaurant commissions briefly rose to 14 rupees on Independence Day before reverting to 12 rupees. Now, with over 2 million daily orders, the 15 rupee levy could actually generate 3 crore rupees daily, which is up from 2.4 crore rupees at 12 rupees, adding 216 crore annually. So rivals like Zomato followed the suit, raising to 12 rupees amid Q1 of FY26 net losses widening 96% to 1197 crore rupees despite 54% revenue growth to 4,961 crore rupees. Now these hikes aim to offset the Instamart investments, also rising costs. Poonawalla FinCorp has approved raising up to 1,500 crore rupees through the private placement of secured redeemable rated listed non-convertible debentures, that is the NCDs. Now, the issue includes a base amount of 750 crore rupees with a green shoe option for an additional 750 crore rupees. Now, these NCDs will be secured by a first-ranking pari passu charge on hypothecated properties, offering security to investors. Now, the move aims to bolster companies' capital base, possibly for business expansion, debt refinancing, or improving the balance sheet as well. Poonawalla FinCorp has been actively raising funds through NCDs and also focuses on increasing long-term borrowings. A tragic explosion rocked Solar Industries India Limited's facility in Chagdo, Nagpur at 12:33 a.m. on last night during the crystallization process of an energetic material in the crystallization building. Now, despite immediate activation of safety mechanisms and also evacuation protocols, the blast shock impact resulted in 1 fatality and 8 injuries in nearby areas. So the company has expressed condolences, assured support to affected families, and also notified the authorities. An investigation is underway to determine the cause and implement preventive measures. Shares of Solar Industries plunged up to 2.9% following the incident, amid concerns over safety at the explosive manufacturing plant, which previously suffered a deadly blast in December 2023. Highway Infrastructure has received a letter of acceptance to collect users' fee on the 4-lane Greenfield Expressway spur from Delhi-Vadodara Greenfield Expressway near Bandikui to Jaipur in Rajasthan. So the contract is valued at 18.97 crore rupees and awarded under the hybrid annuity model. Now, this project underscores the company's growing role in toll operations and also infrastructure management, contributing to revenue generation and also highway maintenance. Ola Electric shares experienced a notable decline of 8% following an impressive 77% rally over 3 weeks. Investors booked profits after the shares' rise in share prices. The sudden drop reflects market volatility and also profit-taking behavior. Ola Electric stock has been under the spotlight amid growing interest in the electric vehicles and also renewable transportation. So market analysts suggest that the correction was a normal phase after the rapid rally. Now, despite the decline, long-term prospects for the company remain strong as it continues to innovate in the EV sector. Investors remain watchful of the future developments and also government policies impacting the EV market. The GST reforms announced by the government will lead to a fiscal burden of only 18,000 crore rupees for the central government, according to Bernstein's analysis. Now, this cost is merely 0.05% of India's FY26 GDP. The reforms include significant GST rate reductions across various goods effective September 22, which is expected to boost the consumption and also improve tax compliances. Now, while the government will face a short-term revenue loss, brokerages believe that the impact is minimal and will be offset by increased consumption and also better compliance. Now, the overall net loss for center and states combined stats at 1.57 lakh crore rupees, with the centre's shares being 74,000 crore rupees, but the effective burden is reduced by reduced capex assumptions. Federal jury in San Francisco rules that Alphabet's Google must pay $425 million in a class action lawsuit accusing the tech giant of secretly collecting user data for 8 years, even from millions who disabled the web and app activity tracking feature. So filed in July 2020, the suit alleged Google accessed mobile devices via apps like Uber, Venmo, and also Instagram to harvest and use personal information, violating the privacy promises. So consumers initially sought over $31 billion in damages. Google spokesperson confirmed that the verdict without further comment. Now, this ruling underscores growing scrutiny on big tech's data practices amid rising privacy concerns globally. Shares of Alphabet dipped 0.8% in after hours of trading. Chinese tech giants like Alibaba, ByteDance and Tencent are defying the government pressure to shun US chips, showing robust demand for Nvidia's AI processors amid escalating US-China tech tensions. Now, Beijing regulators summoned firms to probe H20 ship buys over one information risk, urging the reduced reliance on American tech, but also stopped short of bans. So Nvidia, which regained H20 sales approval in July 2025, holds 6 lakh to 7 lakh units in inventory and also plans a B30A samples for testing soon. So potentially 6 times more powerful at double the $10,000 to $12,000 price. So CEO Jensen Huang assures strong demand and also eyeing a $50 billion China market. The GST Council has slashed the tax rate on cinema tickets priced below 100 rupees from 12% to 5% effective September 22 to enhance the affordability and also support single-screen theatres in smaller towns. Chaired by Finance Minister Nirmala Sitharaman, the 56th meeting approved the change targeting families and budget-conscious viewers frequenting affordable shows. So, however, tickets above 100 rupees retain the 18% rate, leaving multiplex patrons with prices between 150 rupees to 400 rupees unchanged. Now, the Multiplex Association of India's plea for a 5% slab up to 300 rupees was rejected. Now, this partial relief aims to boost cinema infrastructure and also the attendance amid rising entertainment costs, though industry experts note that limited overall revenue impact. Citi's outlook on metals highlights mixed trends, with coal benefiting from GST rationalization, aluminium holding a neutral near-term stance, but also bullish medium-term, zinc facing bearish pressure due to strong supply growth, and precious metals, gold and silver expected to continue rising. So the removal of the compensation cess on coal is estimated to reduce aluminium production costs by 2 to 3%, benefiting major producers like Hindalco and Vedanta. So both the companies stand to gain as lower coal cost ease operational expenses, reinforcing their competitive position in the growing aluminium sector and supported by ongoing capacity expansions and vertical integration. The centre has moved the Supreme Court, seeking transfer of 3 petitions challenging this constitutional validity of the Promotion and Regulation of Online Gaming Act 2025, currently pending before the High Courts of Karnataka, Delhi and Madhya Pradesh. Now, the move aims to consolidate the cases in the Supreme Court to avoid conflicting rulings across different jurisdictions. The Act also imposes a nationwide ban on real money online gaming and also classifies violation as cognizable and non-bailable offences. So the Supreme Court has directed the case to be listed for an hearing on September 8. Now, this consolidation is expected to bring clarity and also uniformity on the law's validity. The Yamuna River surged above danger levels in Delhi today, reaching 207.48 meters at Loha Pul, causing widespread flooding due to recent heavy rains. Now, water-inundated relief camps near Mayur Vihar Phase 1 and also crematoriums like Nigam Bodh Ghat halting operations, while Geeta Colony saw 10 feet of water running store wood. So, affected areas include Yamuna Bazaar, Monastery Market, and roads to Yamuna Bank Metro Station, which became inaccessible. So the flyover on National Highway 44 partially caved in. How over 8,000 people were shifted to tents and shelters. Officials report extensive damage with no immediate aid for crematoriums. More rain is also forecast, exacerbating the crisis. India's infant mortality rate has plummeted to a historic low of 25 deaths per 1,000 live births in 2023, which is down 37.5% from 40% in 2013 and also impressive 80% reduction since 1971 when it stood at 129. So according to the latest sample registration system report from the Registrar General of India, this milestone underscores decades of progress in the public health, with rural areas seeing a 36% decadal drop to 28 and urban to 18. So however disparities persist, Madhya Pradesh, Chhattisgarh and Uttar Pradesh report the highest at 37, while Kerala at 5 and Manipur at 3 lead the nation. So birth rates also fell to 18.4% from 36.9% in 1971, and death rates have halved to 6.4%. Experts hail this achievement as a testament to improved healthcare access, though northern states lag, urging targeted interventions for equitable gains. The Kuki-Zo Council has agreed to reopen National Highway 2 in Manipur for the free movement of commuters and also essential goods. Now, this decision came after a series of meetings with the Ministry of Home Affairs and signing off tripartite suspension of the operations, that is the SOO agreement involving the central government, Manipur government and Kuki groups. So the agreements includes commitments to maintain peace and relocate designated camps from conflict zones and also stringent monitoring. The reopening of NH2 is also expected to ease supply disruptions and facilitate smoother transit, providing relief amid ongoing ethnic tensions in the region. In a nail-biting start to the Hockey Asia Cup 2025, hosts India were held to a thrilling 2 draw by South Korea in a high-octane clash. India took an early lead with clinical strikes, but South Korea fought back, showcasing their resilience with 2 well-taken goals. The match kept fans on the edge till the final whistle. Well, with that, viewers, it's a wrap on this edition of Market Express. But please don't go anywhere and stay tuned to NDTV Profit.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you. Green Talk Social Impact Awards 2025, coming soon.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations?
The Diwali favor rise early. GST Council approves rate overhaul, limiting the slabs to 5% and 18%. This results in a reduction of tax rates on a wide range of everyday items like hair oil, cornflakes, televisions, and personal health and life insurance policies. NDTV Profit brings you coverage from pharmacies to eateries to electronic stores. The Nifty closed flat after opening on a high note, tumbles 1% from the day's high. Insurance stocks lose gains made in early trade. Tata Consumer, HDFC Life and Wipro dragged the Nifty. Top market experts on NDTV Profit weigh in on the GST rate cuts. Ramdev Agarwal believes that the market will need time to digest the magnitude of the GST reform. Foresees a bumper second half. Madhusudan Kela also calls the GST reform a landmark moment for the country. Auto dealers approach the finance minister seeking urgent clarity on the rate or on the fate of their accumulated compensation cess credits. Now these risk becoming non-recoverable under the new tax regime. Former Indian cricketer Shikhar Dhawan appears before the Enforcement Directorate for questioning in an illegal betting app-linked case. The agency recorded his statement under the PMLA as part of this investigation. His comments come after the government banned real money online gaming by bringing a legislation recently. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Himakshi Bahuguna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. So it's an early Diwali for Indians as the GST Council ratified a two-slab GST regime which will come into effect from September 22nd. The new structure makes a number of goods and services cheaper. Items previously taxed at 5% GST such as paneer, milk and certain Indian breads are now exempt with a nil rate. Items previously taxed at 12% and 18% including shampoos, soap bars, several medicines and also cookware have been reduced to 5%. High value items such as air conditioners, televisions, washing machines and also small cars previously in the 28% bracket are now at 18%. So additional reforms including exemptions for individual health and life insurance premiums in a separate category. Sin goods like pan masala, cigarettes, tobacco and bidis along with luxury items such as aircraft for personal use, luxury cars and yachts have been levied a special rate of 40%. So the finance minister clarified in a press conference that the net revenue implication of these changes is expected to be 48,000 crore rupees. So the council emphasized that these reforms are about more than just rate rationalization. They are intended to directly benefit the common man. Now, standing by now, the entire force of NDTV Profit team of reporters who are getting reactions from the ground on GST Diwali Dhamaka handed to the nation by the GST Council. Agni, Charu and Shubhana from Mumbai, Danish and Aishwarya from Delhi. And currently I can see Agni and Danish there with us live. So Agni, I'd like to come to you. How's the mood like there and what are you bringing up from your location?
Right, so let me first tell you the mood is quite uncertain at this point. Restaurants have not yet decided. The number of restaurants we have talked to today, none of them have decided as to if they will cut their rates once the GST tax cuts kick in on September 22, because what they are saying is customers are very sticky to the food and what they order, so a necessary tax cut does not translate into a cut on the prices you see on their menus. But let me take you through what is here on the menu in front of me on the table and what rates have been cut. So to begin with, here you have things like your hair oil, shampoo, toothpaste and soaps. So all of of these were charged at 18% and now they will be charged at 5% GST. Here I have processed food items like mixtures and namkeens, which will be charged at 5% now from the earlier 12%. Beyond that, we have medicines which will be charged at 5%. There were different slabs for different medicines, but now there's a uniform 5% slab for all of them. Other than that, you have things like your pencil, your sharpener, your notebooks. All of these come under the affordable education plan for GST rate cut. So they will be charged from 18% to now from 12%, I'm so sorry, to 0%. Erasers too from 5% to 0%. Here you see, I am not quite sure if you are able to see it, but this is a butter tandoori roti, and butter is one of the items which will be charged at 5% instead of 12% now. So not just butter, ghee, any dairy spread will be charged at that rate. In fact, this is a tandoori roti that is made in the restaurant, but if you are supposed to buy one that was off the shelf packed tandoori roti, that would also be charged at a 0% rate, because breads will be charged at 0%, all breads. Now remember that bread was charged at 0%. We are talking about specific kinds of bread like pizza breads or parathas or frozen parotas, anything like that. So if you're the kind of person who likes to make your butter paneer pizza at home, then this GST rate cut will surely be the Diwali gift the Prime Minister promises it to be. But that's enough from my end. Back to you at the studio.
Right, Agni. So it's definitely a Diwali gift, by the government to the consumers and also to the foodies out there. And now let's also head to Danish in Delhi. So, Danish, small cars especially have got a big boost, from the GST rate cuts. So, what is the mood at the showroom where you are right now?
I visited many showrooms. I spoke to many dealers. They are receiving a lot of queries from prospective buyers. And since a couple of weeks back, we were seeing that there was a complete slowdown, especially after PM Modi mentioned that there would be a Diwali gift for all citizens across the country. So at that time, we saw all these cars the number of cars that were being sold in the past 2 weeks were quite down. But even right now, the situation is much better at these dealerships. As prospective buyers are calling, they're also visiting a lot of showrooms because they are waiting for the 22nd September date, because that's from when the GST rates will be applicable. So the mood is very jubilant because all the users, all the prospective buyers have got a great 10% discount as far as small cars are concerned. But that's not it. As far as SUVs are concerned, earlier they were charged somewhere around 50% GST, which included a 22% compensation cess. But now cars above 1200cc or above 4 meters, they would be charged at 40% flat GST. So which is a major booster for companies like Mahindra & Mahindra and Tata, which are very big as far as SUVs are concerned. However, there is a little bit grim situation for the dealers, as dealers are unsure that what will happen to the compensation cess. And as the FM mentioned last night, that this particular date will be collapsing and the compensation cess date is fast approaching. So dealers are most likely to visit the finance minister once and seek little bit clarity that what will happen to the compensation cess. Because if there is no clarity from the government, then dealers are all set to lose thousands of crores of rupees. And this money that is utilized, it is to build their inventory. So all in all, if we see, the mood is jubilant, ready, the buyers are ready to buy new cars. And not only the dealerships, but also the prospective buyers are waiting for 22nd September so that they can get into these showrooms, get a new car and start driving.
Absolutely. So the market, the viewers, there's jubilance over there. And, they're extremely waiting for September 22, that as and when it's get rolled out, they're going to go and purchase cars for themselves. Now, Agni and Danish, just stay with us. Charu is also joining us from Mangaldas Market in Mumbai, where she has caught up with some drugstore owners. Charu, what are you picking up?
After the 56th GST Council meeting, there have been several reliefs in terms of GST cuts, especially for the healthcare industry and medicinal products. If we look at the current slabs, we know that there are varied slabs present in the market. For example, the 5% slab, 12% slab, 18% slab and the 28% slab. But however, if we look at our list, life-saving drugs, health-related products and medicinal devices are going to be coming under the 5% GST slab. And additionally, the rate on medical grade oxygen, diagnostic kits, resins, glucometer, test strips, corrective spectacles are also going to be coming under 5% GST rate. Apart from this, insurance policies are something which are going to be giving a big relief to common man because they are not going to be attracting GST rates for now. And this change is going to be effective from September 22nd.
Right. Thank you so much, Charu, for bringing that. Now, consumer durables is one sector where the impact of the GST rate cuts will be felt immediately ahead of the festive season. Mahima was at Vijay Sales to speak to the management about this.
I think the enthusiasm from the customers is also being seen. I was talking to the salesmen here as well as the customers that I'm seeing around, and that's mainly around the instruments that have seen GST cut. That is your TV as well as your ACs as well as dishwashers, which has come down from 28% to 18%. What we're seeing is that yes, people are coming in and probably seeing for now as to what they want to buy, and then probably go ahead and book those post 22 September. They've also said, the salesmen are saying that the crowd which is looking right now probably is a weekdays, so slightly lower, but the expectations are that this crowd will probably double in the weekends, and that's something that they are expecting. Plus, when I was speaking to Mr. Nilesh Gupta, the MD of Vijay Sales, he said that now that this is confirmed that the GST rate for ACs as well as TVs beyond that 32-inch will come down from 28% to 18%, he said that they're expecting at least a 20% increase in the overall sales in the festive season itself, which is a big number here to say, because last year was also a very good base when it comes to the festive sales, and a 20% upside beyond that, over and above that, in fact, is a big thing coming in from the MD himself. And he said that now we are sure that we'll be able to do that 20% growth. They'd given a range of around 15 to 20%, but now he's saying that we are sure that we'll be able to grow at that 20% rate. So that's the overall ground report that we are seeing right now. And yes, for sure, customers are seeing that enthusiasm and probably also coming in and getting the details of the TVs and ACs they want to buy and probably book beyond that 22nd September.
Absolutely, Mahima. So, and finally, now let's go across to Subhana, who's at a store selling tobacco, to find out how much of a dent in the pocket consumers are likely to have, thanks to the increase in the sin goods GST. Subhana, over to you.
Luxury items, cigarettes, junk food and even fizzy drinks are all set to get costlier as the government has announced the highest GST tax slab at 40%. Now, this is actually considered as sin tax, which is levied on goods that are considered harmful to health and society. Now, what will be considered under these sin goods, which will be taxed at 40% GST? This will be cigarettes, your tobacco and tobacco-related products, chewing tobacco, gutka, pan masala, BD, cigars. All of this will be considered at 40% tax slab under the new GST regime. Even junk food that has high trans fat, salt and carbonated and energy drinks will also be taxed at a higher rate. Currently, cigarettes actually attract 28% GST with a compensation cess that actually varies depending on the length and type of the stick, that goes around up to 15% or as high as 20%. But since the cess, compensation cess that was levied, which would be done away with, that will actually get merged with GST, and which will be considered and maintained as a tax incidence on most goods. Now, earlier reports had actually warned that the higher GST could actually hurt low and middle income households because this higher GST could actually disproportionately hurt their incomes, because these products actually eat up a large part of their budget. While the new GST 2.0 reforms will come into effect from September 22, the impact and the new GST reforms, 40% tax slab on tobacco and sin goods are yet to be known when it will actually be implemented.
Right, Subhana. So thank you so much for bringing that ground report, and thank you so much, Agni, Danish, Mahima, everybody, all our reporters who are there on ground covering the story so extremely well. And now switching gears, let's see how the markets really, performed today. So morning cheer over the GST Council's Diwali Dhamaka, but it fizzled out later in the day. So the Nifty, however, managed to end the day above 24,700 levels, but it came 1% off the day's high. So sectoral picture was mixed, with defense, PSU, banks and also IT being the top losers. Auto, consumption and finance were the top gainers. Puneet is now joining us with the wrap of all the market action.
Well, it was a day dominated by news flow around the GST, but an anticlimactic ending to say the least, because we did see the Nifty almost close flat and give up all of its gains from the start of the trading session. We did see the Nifty Auto continue to be one of the biggest dominators in terms of news flow because of the GST reduction from 28 to 18%, and that was a sectoral gainer. But let's start with the benchmarks first. It ended on a flat note and it fell 1% from the day's highs of today. So we did see selling consistently from the start of the day and end with just a gain of 24 points on the Nifty 50. We saw stocks like Tata Consumer as well as HDFC Life and Wipro fall the most in the Nifty, while the biggest gainer was undoubtedly Mahindra and Mahindra. We also saw some positive reaction on stocks like Hero, Maruti and Eicher in the Nifty 50, but they failed to hold up those gains by the end of the day. When you look at the other aspects, SBI Life as well as HDFC Life and Tata Consumer fell over 5% from the day's high, and despite the positive uptick for insurance stocks because of the GST rate reduction, we couldn't continue to hold on to those gains. The mid cap as well as the small cap 250 index were both actually in the red in the middle of the day, and they consistently were under pressure throughout the day and remain so as we close out today's session. We've seen essentially stocks like Indian Overseas Bank and Cochin Shipyard and Paytm being the biggest losers essentially for the Nifty mid cap, while for the Nifty small cap it snapped its 3-day gaining streak, and stocks like TBO Tech, which was one of the biggest gainers in yesterday's trade, ended in the red today. We also saw something like a Data Patterns and Shiving Corporation also continue to be under pressure throughout the day today as well. Finally, in terms of sectors, we did see the Nifty Auto being one of the biggest gainers, and stocks like M&M continued to be positive, while amongst the others, the PSU Bank was the top sectoral loser today. We also saw Nifty Bank as well as Financial extend their gains for the second consecutive day, and possibly some positive reaction seen there with the increasing consumption in the second half because of the GST rate cuts. Banks could be a big beneficiary. Overall, when we come back for trading session tomorrow, we will see the onset of this news flow domination continue over the next few days, but that largely seems to be not holding up in today's gains, but overall a very long-term positive news for the market with the GST rate reduction amongst others.
Right. Thank you so much, Puneet, for that. Now for some important market voices. Ramdev Agarwal of MOFSL, Madhu Kela of MK Ventures and Gautam Shah of Goldilocks Premium give their insights or what the GST bonanza means for the markets in the short and long term.
This level of the complexity, the size, it can be done only with the push coming from the big office. Okay, so that has happened. And they've done it very fast. In fact, faster than we thought that it would be third and fourth, and maybe fourth night tonight it would have come. But third only they finished the meeting and kind of announced. So I think they're also in a hurry. And only thing I couldn't understand is why it is 22nd September, why there is a gap. Or you do the meeting only on 21st September. I don't know. There must be some bureaucracy or something. So anyway, I think it's big. And I think it will take time for the market to digest. It's so big that it will take time to digest. And maybe people are much more focused on what happens September quarter, and then let me see the demand and all.
Clearly a landmark move. I would say this is like more than what we normally expect in the budget also, right? Because there is a significant impact which is being done to a lot of sectors, Neeraj. Because if you look at even something like cement, if you are selling a bag for 300 rupees and the price reduction of virtually 10% will mean it's a very, very meaningful reduction and rationalization across categories. It will help lower middle class and middle class people very, very significantly I am assuming government will also monitor that that entire excise reduction will get passed on to the consumer, and that will spur demand. And I am sure government has done a very calculated move by which they will the spur in demand itself will partially compensate the loss in GST, and also the GST increase in some things which are being done.
The bigger picture is more important. I think a year back, the market realized that at these valuations and the way economy was shaping up, there was no way the markets could have run up. I'm talking about last August, September, when we were close to that levels of 26,000. Thereafter, market men realized that there is definitely a problem with the economy. And probably thereafter, you had the government coming in and understanding the situation and taking a very important decision. So I think this can really kickstart the economy. And if it does it, then the market follows a discounting mechanism. And I think it's going to be up and away.
NDTV Profit also spoke with industry veterans across sectors through the day about the impact of the GST rate cuts announced on Wednesday. Now, here are some snippets of what they had to say.
I think the reforms in terms of the GST restructuring is one of the most massive, important pieces of new actions which the government has taken for a long time. I think it is going to have a huge impact on the economy. I think most of us are underestimating its value. We will see how it will energize the people now and the customer particularly.
Surely there should be an uptick in demand, because what we see is clearly a reduction of 5 to 8% in terms of the prices of luxury cars and for us as well. So that should definitely drive demand. There's been a lot of anticipation ever since the Honorable Prime Minister announced it on 15th of August. So there's a bit of pent-up demand, plus customers are waiting for this price drop. I think the bigger change is also in terms of simplification.
I think government has already announced from 22nd September the changes will come into effect. So I think from the company's perspective also, that is the date when we intend to pass on the benefit. Obviously in the interim period, we need to ramp up our ERP systems, IT systems, and also see what is the impact coming on the changes in the input prices too. And that obviously will take some time to really decide. But yes, as you mentioned, this is coming in the peak of the festive season. So this will definitely have some impact in the transition period on the demand, because there will be some ITC accumulation with the dealers' inventory which will be there, and there will be some concern on that. But I think generally from industry perspective, we think it's a positive move, and this, in the long run, is going to improve the demand for the farmers.
First is the farmer retail and distribution. So this going down to 5%. And I can tell you, I've just been assessing from the morning how much work it's going to take. So I have something like 1.2 crore lines in our retail pharmacy that I have to reclassify. And so there's a lot of work behind it. But one thing, I think this is actually good work. Work we'll be happy to do, because it will translate into the customers getting medicines cheaper. And for the life-saving medicines that are in our hospital, making it free, like the cancer drugs, I really think that's a very humanitarian step.
This is a landmark decision which the government has taken, the GST Council has taken. And I see that the agenda of the government of insurance for all by 2047, we are up there because of this. This is a great movement which has happened in the insurance industry, specifically for health insurance industry. This is a real basic benefit which everybody should have, and removing 18%, which means removing almost one fifth of the number, removing cost. It has a huge impact on individual pocket. I am very happy. Niva Bupa is very delighted.
This has been a very good announcement by the government on slashing the GST rates. So majorly namkeens were at the 12%, now that has been slashed to 5%. And even recently, since last few quarters, we have been seeing multiple things has been done by the government, whether it is the tax rebates coming in or whether it is interest rate cuts, and the inflation is also at the multi-year low. So all this and now the GST rate cuts, obviously we feel very confident now that all this will sum up to legs up in the consumption industry overall.
Meanwhile, Commerce Minister Piyush Goyal also described the GST reform as a game-changing move and also asked the industry to pass on the full benefits to the consumers. Listen in.
In the goods and services tax that were announced yesterday, Prime Minister Narendra Modi always fulfills promises made, and on 15th August he had announced that there is a big Diwali bonanza in GST, and we have yesterday seen that what we thought could be big has turned out to be the biggest ever reform that India has seen since independence. This has many dimensions. Consumers will benefit in a very big way with the reduction in taxes across the board on almost all items of our day-to-day needs. Pharmaceuticals, food products, textiles, footwear. I was going through the list, it's all-encompassing. And the amount of changes made in process and procedure will contribute also to the ease of doing business.
My colleague Shrimi also caught up with Sanjay Kumar Agarwal, the chairman of CBIC, or the Central Board of Indirect Taxes and Customs, on how they planned out the rationalization of transport services.
In transportation services, earlier there were multiple rates, 5% with ITC, 5% without ITC, under RCM or under forward charge, 12%, 18%. So now there is a rationalization exercise which has been carried out, because it should not matter whether the goods are transported by, say, road or by rail or by a combination of road and rail that we call as multimodal transport. So now rates have been rationalized. Either it is 5% without ITC or 18% with ITC.
Well, viewers, that's all the time we had on this edition of Profit 360. But please stay tuned to NDTV Profit for more news and updates.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you. Green Talk Social Impact Awards 2025, coming soon.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
The markets move fast.
Good afternoon. Thank you so much for tuning in to this special programming on the back of that Diwali Dhamaka that we've seen. I'm Shreyansi and this is Mahima, and over the next half an hour, we'll take you through what the impact is that is being penciled in when it comes to these measures that have been announced, and quite the measures, Mahima, that we have. It's quite the eventful afternoon. In fact, let's begin with the takeaways, try and understand what this really means for the consumer durable segments first things first. And let's also connect with the management of Vijay Sales. Then Nilesh Gupta, director at Vijay Sales, is joining us on the show. Thank you so much, Mr. Gupta, for taking time out and joining us today. First things first, I want to understand what you think of this sort of announcement that we've had come in. Is this sort of matching your expectations? Were you expecting more, or is it in line with your expectations then?
No, I think the expectations were clearly set by the Prime Minister, and the simple reason, the three categories which we expected the prices to come down, and that's what has happened, the GST rates to come down. And I think it's a very good precursor to Diwali, with the GST coming down on 32 and above televisions by 10%, on air conditioners by 10%, and dishwashers on 10%. I think this will be something to celebrate. People, as it is, there was a lot of interest and a lot of expectation for this Diwali to happen, to become big. And with this change, we think it will really be a Diwali Dhamaka.
Mr. Gupta, it's probably Diwali Dhamaka pre-Diwali, because this now comes into effect on 22nd of September. And last time when we spoke, we were talking about this as to, if this happens, it's going to be a big, relief for the industry as well as the consumer as well. Because the expectations were that if this happens on Diwali or near Diwali, the sales that actually starts beginning from Navratri will, probably take a halt, because buying an AC or buying more than 32-inch TV could wait for a month or two. So it's a big relief for you at that. And just want to understand that now I believe the inventory overhang, which was a concern, is probably gone, correct?
So inventory overhang was never a concern, because in GST, the best part is it's always input and output.
Correct.
So even whatever inventory we are carrying is at a higher rate. But when on 21st midnight, when the new rate kicks in, the consumer will get a 10% off. And what happens is whatever we sell, the output would be 18%. So there was never a fear of, if we are holding inventory, we'll make losses. Nobody will make losses. That is the beauty of the GST regime. And so no inventory hangover. The best part is the timing is very right. The sales starts from the first day of Navratri, and from that time onwards, the new GST rates kicks in. So all in all, a real good Diwali is expected from all of us. And not only this, it's not only the rates which have changed for our category, but definitely overall there's been such a drastic change in the rates. At the end of the day, each household is going to have more money at their disposal. And I would want to believe that whatever extra money they save in other categories also will come in our category to buy. So I think it will be a real bumper Diwali for consumer durables and mobiles and laptops.
Absolutely. And Mr. Gupta, talking about that, do you think that, your sellers per se and brands, considering this GST boost is already going to benefit the consumers, to go ahead and further give more benefits, some prices will be slashed, any expectations there, or maybe discounts being raised?
So like every Diwali, there are going to be a lot of offers for the consumers. So basically, rather than slashing the price, what the brands do and what retailers do is give greater offers on exchange, give better EMI schemes, and in some cases, there will be freebies also. So definitely, nobody is going to shy away from giving those offers, which happens every Diwali. There's a possibility that one or two brands may even do something more because this seems to be a real one bumper Diwali expected.
And last time when we spoke, you also talked about the kind of boost in the festive season that you're expecting, and could be around 20% from the base last year, which was already on a higher base. Does that still hold, or are you expecting beyond that 20% mark?
No, beyond 20% marks would be becoming too greedy. And I think practically it is also not possible to manage so much of business. But even if we see 10% was something which was surely expected, that would be the base minimum for the growth. But now with all this happening, I think 20% seems to be achievable.
I also wanted to understand if the concerns around monsoon that, were previously being expressed, are those going to be offset? What is your expectation in that regard as well?
So we are keeping our fingers crossed that whatever this unseasonal rains is coming across the country will stop in the next 10-15 days. But yes, if the rains continue, they do cause an impact on walk-ins, and it does make a difference. But let's keep our fingers crossed.
Okay, all right, Mr. Gupta, thank you so much for giving us those insights, and always a pleasure speaking with you.
Thank you very much.
All right, moving on to our next guest. I think the entire consumption pack, Shreyansi, is going to benefit from this GST boost. And the other segment that is set to benefit is the snacking and the namkeen segment, because for them also, GST will be coming down from that 12% or 18%
well,
mark.
Absolutely, it's quite a treat for them.
Absolutely, or to a 5% mark, right? So a lot of these counters are set to benefit, and probably this benefit will be passed on to the consumer as well. And to discuss as to how the snacking industry is viewing this, we're joined by Rigan Rethatha, who is the Chief Financial Officer of Gopal Snacks, joining us now. Rigan, hi, a very good morning to you, very good afternoon to you, and thank you so much for joining us and taking out the time. My first question to you is this new GST reform move that the government has given as a pre-Diwali dhamaka. How is the snacking industry viewing this, and how do you see this boosting demand? Because Diwali is the time when your sales are at its peak.
Correct. So hi, good afternoon to all NDTV viewers. And yes, this has been a very good announcement by the government on slashing the GST rates. So majorly namkeens were at the 12%, now that has been slashed to 5%. And even recently, since last few quarters, we have been seeing multiple things has been done by the government, whether it is the tax rebates coming in or whether it is interest rate cuts. And the inflation is also at the multi-year low. So all this and now the GST rate cuts, obviously we feel very confident now that all this will sum up to legs up in the consumption industry overall.
Absolutely, and I also wanted to get a quick check as to what you think about the demand picture is going to look like from here on. What are you expecting on that front then?
See, demand picture in case of urban demand, where we felt there was some slowdown, so that should pick up because the more consumable, more money will be available to the consumers, and that should help us overall demand in the industry.
Mr. Regan, in terms of your input tax credit, how does that work for you? Right now, your overall output GST will be at 5%. But if I'm not wrong, some of your input tax GST will be at a higher rate. And is that inverted duty applicable for you then? And that's beneficial for you?
No, so our overall weighted average input rate would be around 4% because some of our inputs like raw material in the form of chana, those are at 0 rate, and the palm oil, which is at 5%. So overall our input structure is at 4% all across, and output is 5%. So things are favorable in that option.
And in terms of pricing, are you expecting any change when it comes to, I mean, I'm sure that this will not happen for your lower end of products, but products that are, beyond that 20 rupees segment, any kind of pricing change or maybe grammage change that you'll be doing to benefit, to maybe give more benefit to the consumer along with this GST benefit?
Yeah, so definitely, as yesterday our finance minister expressed that they are very confident the corporate would pass on this benefit to the consumer, and definitely we would be working on that front. So in smaller packs like 5 rupees, 10 rupees, there would be increase of the grammage, and in the higher packs, it would be the combination of the both, wherein we would be having some price reduction as well as increase of the grammage.
Well, absolutely, and I'm also tempted to ask if this is currently in line with what you were expecting. Is this what you were penciling in, or did you have more in mind?
No. So we were always, Namkeen as a overall industry was always asking for the rate cut simply because the sweet was always at the 5% and Namkeen was 12%. So prior to GST regime, Namkeen was also at 5%. So this has been our long ask since last 6 to 7 years, and now we are very thankful to the government of India. They have fulfilled our demand.
Mr. Regan, in the last few quarters, because of palm oil going up and lot of other inflationary pressure, inflationary commodities impacting the overall margins, you have gone ahead and taken price hikes or reduced grammage as well. Just want to understand that now that this has come in, plus inflationary pressure is also easing, what is on the cards going forward? Will there be price hikes or grammage reduction going forward?
No, so for this GST impact, we would be reviewing the things, and if required, we would be increasing our grammage if the prices of the raw material remain stable. So currently, as you rightly said, from the March 25 quarter, there has been cool off in the raw material prices, especially in the prices of palm oil and chana, which constitutes of almost 50% of our basket. So we do expect there will be some grammage increase in our lower SKUs.
Well, absolutely, and while we have you with us, I also wanted to get a quick check as to what you think about your outlook when it comes to market share. Is there anything that has changed there as well?
So, no, the outlook of our market share remains. So, we would be slightly in the last year because of our fire incident at our organization. So, there was slight reduction in the market share, but we are quite confident that we will recoup the same in the current financial year. Primarily on account of increase in the sales, because we are expecting 20% of the sales growth in the current financial year, and now the GST benefit coming in, so this will make our things very confident enough to achieve that number.
Then do you think you're going to change your guidance from that 20% growth maybe to something higher?
No, so currently we are keeping it because the guidance which we had given, that was in the range of 15 to 20%. So we are sticking to that guidance.
So that will be on the higher end of your guidance, I believe.
Yes.
Okay, and that this GST boost supposed to. Okay, Mr. Regan, I also wanted to understand as to where your capacity utilizations are right now, considering the entire fire incident as well. I believe that is also now done. It's operational again. Where are the capacity utilizations right now, and do you think that you have enough capacity to support demand right now?
Yeah, so our capacity utilization currently at the company level is around 40%. So we have enough capacities available to fulfill the demand for at least next 3 to 4 years.
Okay, and what about the kind of geographical expansion that you're looking at? Because now, it makes all the more sense to, go ahead and expand your presence pan-India. What are the plans and strategy in place with regards to that?
So geographically expansion, we have always been looking at outside Gujarat. So currently our Gujarat sales mix, overall sales mix is roughly around 65%. And the non-core states, so that consists of Maharashtra, Rajasthan, Madhya Pradesh and Uttar Pradesh. So that's where we are looking at major territory coming in and new growth. And that would be on account of we are increasing the dealer base over there. So the full year, last year we had the dealer base of around 850, and next year we are targeting to, so next year, that means the current year we are targeting to have 1150 odd dealers on our territory.
Well, absolutely. And also about your top line then, I believe 18 to 20% for financial year 26 is what you had in mind. Is there a change there that you're seeing? What do you have in mind when it comes to that?
No, so see, last year, as I said, we had the fire incident at our Rajkot facility. So earlier that was contributing to around almost 65 to 70% of our sales. And now to recoup that, we are coming up with the additional Modasa facility. That is one of our manufacturing plant in Gujarat. So that we are commissioning somewhere by the end of September. And so we are maintaining our guidance because the last year, because there was a lower sales in the Q4, so full year guidance remains intact.
Okay. Mr. Regan, with regards to your new products in pipeline, give us some perspective there. And considering, that the youth right now is shifting towards, shifting towards more healthier side of things, becoming more and more health conscious. Any view with regards to, that segment, and if you are planning to, bring in more products which are more healthier?
No, so currently we continue to remain focused on what our customer base is. So our customer, we never intended to go to the healthy snacks category, and that is we remain constant on that. On an immediate future basis, yes, we would likely to go into the category where there is a lesser dependence on the palm oil. So that is our immediate aspiration as far as product category is concerned.
Well, absolutely. And I also wanted to get a quick word in as far as your product mix strategy then is concerned, especially when it comes to that 5 rupee price point packs. You did have, previously they accounted for about 75% of your revenue. What is the outlook that you have for these 5 rupee price point packs as well going forward?
So 5 rupees pack point, yes, you rightly said earlier it was 75%. So we are gradually decreasing that 5 rupees pack point in terms of sales mix, not in absolute value. So last year we ended somewhere around 68%. This year we are targeting to a sales mix of around 65%, 64% kind of thing.
And Mr. Regan, with regards to where your sales are concerned, how much of it is right now quick commerce and e-commerce versus that of general trade?
So currently, in terms of quick commerce or e-commerce, it is very small. So yearly, it is roughly around 20 crores out of it.
And do you think that this new GST reform and probably these quick commerce platform now penetrating towards the tier 2, tier 3 cities would probably increase the the percentage of sales that's coming in from the quick commerce and e-commerce space?
Yeah, so we are working very confidently on that quick commerce. So last year, our quick commerce sales was only around 6 to 7 crores for the full year. And this year, by now itself, we have crossed that number. So we are quite confident enough in terms of this GST coming in. So we have more urban consumers coming in, more disposable income available to us. So definitely more growth would be coming in that trajectory.
Okay, all right. Okay, Mr. Regan, thank you so much for giving us all those insights, and that gives us a holistic view as to how this new GST 2.0 is set to benefit the snacking industry. Thank you so much for taking out the time and speaking with us at NDTV Profit. All right, shifting focus now from the consumption space to this one space that we've been talking about, and that is the insurance space. Now, in order to discuss as to what's happening and how is the insurance industry set to probably benefit from this new GST 2.0, we are joined by Narendra, who is the president of Insurance Brokers Association of India, joining us now. Mr. Narendra, thank you so much for taking out the time and speaking with us at NDTV Profit. Just want to get a sense that this complete exemption of GST from life insurance and health insurance product, which was probably anticipated, and there were media sources that were indicating this before. But how are you viewing this shift, and how does this set to benefit the entire industry of the insurance segment?
Thank you for having me today. This is indeed, as the Honorable Prime Minister promised, the GST 2.0 reforms. This is indeed going to be a blessing for the insurance policyholder, especially on the life and the health insurance space, as immediately they will see the savings in the 18% GST that has been charged on the term insurance and health insurance segment. So that's going to result in savings for them. This can result in increased buying of insurance by the policyholders, thereby making insurance more affordable and increasing insurance penetration, which has always been a concern of the government and the regulator.
Sir, this is Shreyansi as well joining in the conversation. I also wanted to get a sense of what you think this is going to mean when it comes to volumes as well, in terms of how does this rate cut really translate in terms of your volume guidance then?
So as the Honorable Finance Minister mentioned yesterday, that this is going to be effective 22nd of September. So all renewals, any policyholders will immediately get this 18% cash savings in their hands. New buyers of insurance also will get this 18% reduction in pricing. And since health insurance become more affordable, so it's up to the distributors, insurance companies, distribution agents, brokers, everybody to ensure that we make do appropriate awareness and outreach to the market and go to the uninsured population and advise them the importance of having insurance in place and get them under the insurance ambit. So this is definitely going to propel insurance penetration. That's going to happen.
Mr. Mahendra, in terms of the earlier structure which had GST, the structure was that the input tax credit that these insurance companies used to get was set off against the output tax credit. But that will probably not be available now, since the output tax is zero. The input tax cost will be borne by these insurance companies. Now, two-part question here, because one, how is this being read as by the entire industry? And secondly, do you think that you as a body is going to approach the government, to get some kind of relief there, because that'll overall have a huge bearing when it comes to the margins as well as the bottom line?
Input tax credit, yes, insurance companies were availing input tax credits on GST collected on health insurance premiums. Now on retail health insurance or individual health insurance, it becoming zero. Insurance companies will definitely go back to the drawing board and look what is going to be their impact. We believe the impact will be marginally felt by the standalone health insurance companies and not much by the general insurance companies, because general insurance companies do have a significant portion of non-health premiums also which they collect, that is on property, motor, liability, so on and so forth. So that's one area. Our ask has been constantly with the government to exempt health insurance from GST. So I don't think we'll go back to the government to make any further changes. And we believe that all insurance companies are synced that they will pass on this benefit 100% to the policyholders. What we would like to go back to the government and the regulator is to consider that on the group health portfolio, corporate group health portfolio, generally all corporate group health portfolios, the premium paid by the organization is part of the CTC of the employee. So in effect, the employee is paying from his tax earned income only. So we would like to see and make a representation how even those people get the benefit of this GST exemption. Currently, this GST exemption only for the retail plan. And so we like to look at how the corporate group health pans out, and probably we would be grateful if the government and the regulator makes a push on that segment also, so that this exemption on health GST is passed on to everybody.
Yeah. So that's something that we're looking forward to as well. Thank you so much for taking time out and joining us. That was Narendra Bharindwal, President of Insurance Brokers Association of India, joining us on the show. But tell you what, let's move on. Let's get you the word coming in from another important management. Then Santosh Iyer, MD and CEO, Mercedes-Benz India, joins us on the show. First things first, a very good afternoon to you. And I also wanted to get a sense of what you think in terms of the kind of demand impact that you're penciling in when it comes to this move. It's quite an important announcement. What do you make of it?
So surely there should be an uptick in demand, because what we see is clearly a reduction of 5 to 8% in terms of the prices of luxury cars, and for us as well. So that should definitely drive demand. There's been a lot of anticipation ever since the Honorable Prime Minister announced it on 15th of August. So there's a bit of pent-up demand, plus customers are waiting for this price drop. I think the bigger change is also in terms of simplification. Earlier, you had EVs at 5%, then you had multiple slabs. Also for hybrids, it was around 43%, which says today it's very clear that there is only one slab at 5%, then you have an 18 and a 40, which means clearly it's either EVs or combustion engines, including hybrid, which also makes the consumers now very simple to decide which kind of a powertrain option they want to do. It also clearly gives an indication on the decarbonization agenda. So clearly, I think simplification at the core and reduction should help more driving demand. India has been was always the highest tax market in the world when it came to luxury cars and in automotive in general. I think this has reduced a bit. Even now the taxes are high, because we still need to remember there is a 40% tax on car, and on top different states have different taxes ranging from 15 to 20% for registration. So technically the walk is still I would say 60% even today, but definitely the step in the right direction, and it should stimulate demand for sure.
Mr. Mahima also joining this side. Just want to understand one thing from you. Considering the inventory that is already lying with the dealers right now, that probably would be taxed at that 28% plus cess, which amounts to around 50% of tax. Correct me if I'm wrong here. Is this reading correct? And if yes, how does what is the strategy in place to make sure that this inventory is sold off and it benefits the consumer as well as the dealers and you as a company?
No, you are spot on. I think the biggest issue is the gap difference, because the cess has to be, it was kind of a moderatable in the earlier past with excise and now later on with cess, that when you sell the car, you have to recover. But now with this reduction of pricing and reduction of taxes, how do you recover the cess? But yesterday, as part of the press conference, there was an FAQ to this effect. And what was said that the finance ministry will come very soon on the compensatory mechanism. So they will give a clarification. Our expectation and request from the entire industry would be to do that before 22nd of September, so that everybody is clear on how this will be taken care of. Otherwise, there is a lot of inventory sitting at different tax slabs, and then even if you now have to pass on the new taxes to customer, where do you recover the gap and how does that get compensated? That's not small money. It runs into crores of rupees. So hopefully some clarification comes by 22nd, and I think the bigger one is out now. The nitty-gritties are yet to be sorted.
No, point taken, Mr. Iyer, but I also wanted to get a quick sense of what you think when it comes to interest coming in from first-time buyers, when it comes to the demand. Is there something that you're penciling in when it comes to first-time buyers? Because you did talk about how this is a welcome move, how India, of course, is one of the highest taxed countries when it comes to luxury cars. So what do you make of demand then?
No, for surely. See, two things will happen. One is there will be new customers who are considering premium or mass cars. Now they may feel that let me enter luxury, because the prices of cars coming down by 2 to 3 lakhs in the entry segment will drive lower EMIs and an easier way to upshift. But also within the luxury segment, we see a lot of consumers upgrading to the next level. So maybe a GLA customer going to a GLC going to a GLE, and E-Class maybe thinking of an S-Class itself. So I think that's also a possibility that we see. So the mix of the cars that we sell in terms of portfolio should also improve because of the overall pricing coming down. But the bigger impact on automotive would be also the trickle-down effect, as we say, because for an average consumer, the shopping basket now is cheaper. They would have more disposable income to pay higher EMIs. And of course, the car prices have also come down. So both the effect should drive more money in consumers' pocket to upgrade and also consume not only luxury cars, but in general, the overall category should help from this big step.
Absolutely. Thank you so much, Mr. Iyer, for taking time out and joining us this afternoon. So lots of moving pieces when it comes to this entire puzzle. Thank you so much for telling us about that. The trickle-down effect, Mahima, was quite interesting that he's talked about. But tell you what, with that, we're completely timed out on this show. Thank you so much for tuning in.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you. Green Talk Social Impact Awards 2025, coming soon.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Well, it is as big as it gets in terms of reforms that you can anticipate. It almost seemed like we are preparing for the budget, right? The last 3 years ago. And therefore, we've got one of the biggest voices in Indian markets and arguably from an economic perspective and a corporate perspective, Mr. Ramdev Agrawal with me right here in their office. Mr. Agrawal, thank you so much for agreeing to do this.
No, thanks for coming here.
No, the pleasure is entirely ours. Love talking to you always. What did you think of this when you saw, one, the changes, but two, the approach of the government to making these changes, Mr. Agrawal?
So obviously it is coming from PMO or PM himself that he is keen, because this level of the complexity, the size, it can be done only with the push coming from the big office. Okay, so that has happened. And they've done it very fast. In fact, faster than we thought that it would be third and fourth, and maybe fourth night tonight it would have come. But third only they finished the meeting and kind of announced. So I think they're also in a hurry. And only thing I couldn't understand is why it is 22nd September. Why there is a gap? Or you do the meeting only on 21st September? I don't know. There must be some bureaucracy or something. So anyway, I think it's big. And I think it will take time for the market to digest. It's so big that it will take time to digest. And maybe people are much more focused on what happens September quarter. And then let me see the demand and all. So I did one thing. I did only research. I called up one of the dealers. And incidentally, he's the dealer for Maruti, TVS, Hero Motocorp. So he's a guy who understands.
Auto.
He said, boss, most likely will not be able to supply the demand surge, which is going to happen because of this.
Wow.
So now we have to interpret we have to go and ask many guys. The companies guys will have less feel than the dealers. So I think, I think there are 3-4 factors. It's a Lollapalooza effect in the sense that one is the credit flow. Okay, because we killed the momentum last year by bringing down the credit flow from 17-18% to 8-9%. You can't grow this economy at 11-12% if your credit flow is 8-9%. Right. No way.
Right.
I don't know, whatever was the economic logic for that, they would know, the regulators would know. But now even FM and government wants the credit flow to increase. And inflation, which was the main problem, that is also well under control. So now we have a credit flow, we have liquidity flow with the CR cut, and then now you have the GST cut. So all three have come together, and there is a push from the whatever power that be, regulators and everybody, to push the economy forward. So I think all the three things, the rate cut, flow cut, the availability of liquidity, and now GST. I think we are going to see the second half, and now bumper monsoon also. So there are a lot of factors which are coming together. I would think that, and then first quarter GDP growth of 7.8%. I don't know how much extrapolatable it is, but it's a good news.
Yeah.
At least all the economists are wrong. So what I'm saying is we are sitting on something very good, and it can't get any better. And I only hope that there is no, will not get, because some of the guys I was talking to yesterday in my conference, and they were saying, sir, we are hearing that they are going to tinker with the input credits and also. I only hope there is no hidden, in this to cut the thing. And the impact, the revenue impact they're talking about is 45,000 crores for the current year. So it must be obviously to do with the second half. So the total impact on annualized basis would be 90,000 crores. I'm quite sure if, even if this is the level of impact, of course, 90,000 lakh crore relief we have not seen ever. So, but it will have a huge, multiplier effect, and I think the bounce in the volume bulk of it will be covered in 1 year, 1.5 years. I would think so. If the credit, apart from the GST cut, credit flow is very important. They must make sure that credit is available in the economy, and it is the cost of credit is also important.
Right.
So they should also hammer the system that nobody should profiteer out of this.
Yeah.
Everything should be, every drop of it must go to the consumer.
Right.
So that is very important, and I think it will happen because competition is enough in the system. Banks are cutting each other. Now NBFCs will do very well, so there would be competition out there. But NBFCs, to get the liability so that they can disburse, that has to be again the bank. So I think banks have a major role to play to make this GST rollout successful, because it's not because if you cut the price, but if you don't give me credit, again things will not happen.
That's true.
So combination of credit and affordability, it should do wonder.
मुझे याद है we were sitting upstairs for one of the interviews. तभी you had told me कि Neeraj, the government needs to move on reforms, ease of doing business, etc. Do you think, sir, this is the start of some of the things? This is the big bang start, and some other measures are due to come.
The thought process is absolutely right. But you have to make. See, my guys are poor. I have very limited purchasing power. Though now, if you can't increase my purchasing power, make the things cheaper so that I can buy, instead of 5 units, I can buy 6. But that one extra unit, in any case, you charge me 25-30% income tax. उसके ऊपर जब मैं खर्चने, when I go to buy, you charge me 28 and then 40% cess लगा के. We don't get anything. My rupee doesn't buy. Per se, I earn less dollar, and the dollar doesn't buy. What is the fun? So I think my rupee should become much. In fact, as you keep reducing the taxes on the people, the power of rupee will go up big time. भाई आपको 100 रुपये मिलता है, 100 रुपया आपको लंच खरीद सकता है. ऐसा नहीं है कि लंच 100 रुपये कुछ नहीं है. Like 1 rupee doesn't buy anything, but $1 buys. So that the currency should buy a lot more.
Right.
That is very very important, and that can happen only if you because taxes, they're they're cascading in the sense that you charge somewhere 18 and then it घूम फिर के और कहाँ लगते आता है. At the end of it you get very little.
Got it.
So I think this is one thing, the style of it, the size and the impact with which they are doing it. I hope this, and I hope my optimism bears out.
हाँ, आज market में इतना दिख नहीं रहा है, sir.
I'm very surprised. So I could be wrong, market could be wrong. Only time will tell. So, but I'm very excited about it. And I showed you the tweet. I sent it to my investment team that they are saying that. And it is going to start. See, 50% of manufacturing is automobile. So I think the biggest impact will be on automobile demand. Two-wheelers. Why should it be so expensive? 100, 110cc bike you charge 28%. We got to be ashamed of it. So cement वो मिट्टी है, 4 रुपए 5 रुपए केजी का आइटम है, उसमें भी आप 28 टका चार्ज करते हो. तो I think one thing I would say is that this aerated water, उसको वो sin कैटेगरी में डाल दिया. यार वो पान गुटखा और aerated drink are two different things. It's a basic necessity for any economy. I think they should not categorize as sin. At least that looks very bad. So apart from that, I think everything is very good. And let's see. The action is yet to start. The only show is announced.
So, sir, do you believe that एक तो income tax cuts हुए थे 12,000 per month, then the RBI has reduced rates and therefore maybe borrowing could be cheap. Nowadays, are we set for a bumper Dashera, Diwali and the period to follow?
आपको कंपनी वालों से बात करो, because मैं तो यहाँ बैठा हूँ.
आज कंपनी वालों से बात करी, they were all very hopeful, very bullish.
हो गया ना. अभी तो now ifs and buts नहीं है ना. अभी तो ifs and buts नहीं. अभी तो क्या ठीक है, एक अनसर्टेनिटी है ये US का, और 25% वाला जो है, तो वो जब होगा तब होगा. We spoke to Piyush Goyal ji, he came to the conference and all, and so he said, we are in negotiation, channels are open. some sanity will prevail, but it may take a month to whatever, this geopolitical stuff. So anyway, that's, apart from that, I don't see any clouds on the this thing horizon. Because now, see, just look at the flow. See, stock market is all about combination of things. I mean, one is the purchasing power. So you are seeing massive flow of domestic. Last month, they bought 95,000 crores. And still building up, okay? That too, despite that very lackluster performance in 12 months. If you give 15-20% performance in next 1 year, I mean, I don't know, maybe in 1.5, 2 years time, we might be at 1.5 lakh crore, 2 lakh crore per month DI flow. So I think, and that has also got a role to play in the stock market performance. And the performance leads to the flow, and flow leads to the performance. Virtuous cycle can come. And once the performance comes, then the risk money flows into the real economy. So now the real economy should have demand. The moment you have demand, the entrepreneur, see, they keep saying that private capex is not a... private capex होगा क्यों भाई? मेरा capacity already नहीं बिक रहा है. If I have a capacity for 6 million motorcycle and my demand is 5, why do you expect me to put up another 2 million? But now demand will not be 6, demand will be 8. And you just watch what exactly happens to the new capex announcement by these guys. They will go at double the speed. And then you must not miss out on that. As policymakers, you must encash on that. Okay, now I'm at 18, can I make it 15? And will you put up another 5 plants? And they should also be businessmen, na? At the end of it, in 12 months' time, we'll know whether it was a good business or not to cut the, this GST rates. Aye. Was it better to be at 28, and is it better to be at 18? At 28, you might be collecting, say, X number. But what jobs are there? There is no incremental job creation. At 18, you will collect more money, and jobs will be a lot more.
Right. You expect, sir, that the impact of something like this on private capex could happen in as soon as 6 months or 12 months, or could it take slightly longer?
See, once the businessman sees that, boss, one is that one-time effect. Most of I was talking to my analyst, he said, Ramdev ji, एक बार तो effect आएगा, लेकिन क्या होगा उसके आगे?
Yeah,
so they have to also see this is a compounded effect.
Right.
The impact is compounded, because what will happen is that you buy, instead of 100 cars, instead of buying, say, 3 million cars, you start buying, say, 4 million cars. Okay. Now that 1 million more car, and then what they're thinking that it will go to 4 million, then it stayed 4 million. No. The whole thing will have that effect, because your credit growth is year on year.
Yes.
So if you bring down from 18% to 8%, what happens is that you take out the purchasing from the power from the system. So the growth in the GDP, so GDP doesn't decelerate, it doesn't decrease. The deceleration happens because you have taken away the purchasing power from the system.
Right.
The 10 lakh or 20 lakh crores extra credit you give, that is additional purchasing power you are injecting in the system. And now you're saying that while you're injecting 20 lakh crore of purchasing power, you're also making things cheaper. So it will buy not only 20 lakh rupees worth more, but it will buy maybe 22, 23 lakh crore quantum kind of a thing. So, I mean, I'm not an economist, you speak to the economists guys, but
no, but you
I think,
say these things much better, sir, which is I'm asking you.
Yeah, so since I don't have the privilege of using some economics words.
Economic jargon, but you can explain it.
हाँ, so मैं एक businessman के हिसाब से या जो समझ के हिसाब से common मैं बात कर रहा हूँ, but I don't know. I mean, while I'm talking to you, I'm even more excited कि ये होने वाला है पक्का, हम बता रहे जो stock market का boom जो है ना, जो onboarding का जो digital onboarding का जो मजा आया है कि 3 लाख से 30 लाख कस्टमर आ रहे हैं रोज, मतलब ये सब पूरा तुम्हारे बदल जाएगा, ये कहानी बदल. हमको इंडिपेंडेंस मिला है 5 साल पहले, 75 साल पहले तो खाली पॉलिटिकल इंडिपेंडेंस मिला है. आप देखना सही इसका इफेक्ट. ये भी दूसरा इंडिपेंडेंस है. ये जीएसटी का जो है 28 से 18 जो है ना, ये कहानी है. आई ओनली होप दैट द नेक्स्ट रीलुकिंग हैपन्स मच अर्लियर. आई मीन द पॉलिसी मेकर्स मस्ट लर्न फ्रॉम दिस. I hope, and they'll learn. I mean, let's see what happens in the next 12 months is going to be very important. Markets, of course, markets are there to encash on the earnings explosion. Earnings will surge. Okay, and there's enough buyers. So the moment earnings come, what is going to happen.
Sir, so एक question, right? Earnings. No, of course not, sir. वो तो क्या है, आपसे वो नहीं. But if earnings are due to surge, if DI money might go, hopefully, to the numbers that you were talking about, right? That's a headline for me, right? That 1.5 lakh crore से 2 lakh crore this thing. हाँ, हो सकता है in 2-3 years, whatever it is. और अभी तक FI पैसा आया नहीं है. If all of that comes in,
don't count on FI.
Don't count on FI.
Because वो उनके out of syllabus उनके लिए. India is out of syllabus, I'm telling you. क्योंकि क्या है, उनके लिए बहुत सारे ऑप्शन है. वो हमेशा चाइना से कंपेयर करेंगे. वहाँ पर ये बायदू ये भाव मिलता है, इसका ये भाव मिलता है. मतलब भाई तू उधर कंपेयर कर. भाई करो क्या, मतलब उसको. एंड सी दे आर नॉट सीइंग द कि पैसे कहाँ बनेंगे. दे आर कंपेयरिंग द कंपनीज. दे आर नॉट लुकिंग द स्टॉक प्राइस. दीज आर 2 different थिंग्स. यू नो, आई माइट गेट. मैं बोला चीप खरीदना रशिया जाओ, मैं आपको 2 का पी मिल जाएगा. लेकिन पैसे नहीं बनेंगे ना आपके. आपको पैसे बनाना है कि खाली पी मल्टीपल देखना है. तो वो पी मल्टीपल देख रहे हैं और हम लोग पैसे कमा रहे हैं.
This is another headline. Ramdev ji, I know आप busy हो, तो one last question sir, लेकिन फिर भी कि if all of this were to happen, right? Is this a big boost to the economy, right? Because now you've seen the power of the stock markets helping the economy at large, and in this fashion, this will be a big boost.
Now, bada wealth. See, when market goes up by 20%, what base we're talking about? Now it is 125% of GDP. My GDP is 350 lakh crores in the current year expected. Okay, my market cap is 475 lakh crores. 475 will go up by 20%. तो कितना होगा?
5.5 पौने 6.
100 लाख करोड़ से बढ़ेगा. 90 से 100 लाख करोड़ से बढ़ेगा. मेरा GDP बढ़ेगा 30-40 लाख से. And boss, is a real money in the hands. Market cap increase is real. So the kind of wealth effect which is going to happen. Now वहाँ पर क्या सरकार को समझाना पड़ेगा कि भाई थोड़ा कैपिटल गेन्स हो रहा है सब. मतलब use it to your advantage. मेरे को कुछ, I don't want any tax relief personally, but you got to the way you are using this thing, you should use the capital market even bigger than the real economy. The real economy will be driven by the capital market, and capital market can drive the real. In fact, the biggest strength of US is not their economy; it is the capital market of theirs.
Yeah.
You know, $65 trillion. The kind of wealth effect they have when it goes up by 20% is like $12-13 trillion, boss. So that magic machine is there with India also.
Yes.
So how do we use that innovatively? वो बहुत important है. वो पॉलिसी मेकर को साथ में लाने का कि भाई स्टॉक मार्केट भी एक मशीन है. ऐसा RBI है, सेबी है, GST है. ऐसा ये भी एक मशीन है.
So lovely talking to you, Mr. Agrawal. Thank you so much for taking the time out. No, I would have loved to do this any which ways, but today was a special day.
Let's welcome in R.C. Bhargav, chairman at Maruti Suzuki, to get his reaction as a veteran to the industry. Mr. Bhargav, welcome to the show. Your initial reaction with regards to the boost the auto sector could get from here on?
I think the reforms in terms of the GST restructuring is one of the most massive, important pieces of new actions which the government has taken for a long time. I think it is going to have a huge impact on the economy. I think most of us are underestimating its value. We will see how it will energize the people now, and the customer particularly will suddenly find that things have changed for him. The income tax relief came to him. On top of that, the repo rates have been coming down. Interest rates have finally started coming down. We have more money now in the pockets of the customer in the future because household expense items have all become cheaper. So net, there's far more purchasing power with the customer, and he will look upon this Diwali as a time to go on a shopping binge.
Go on a shopping binge. That's interesting, Mr. Bhargav. So will purchasing power then return with just the GST cut?
It reduces the retail price of a small car by 8.5% to 9%. That is significant. For a car costing 5 to 6 lakhs, it means something like a 50,000 rupee reduction.
Right, we're talking about a 50,000 reduction, but will this person actually have that 5.5 lakhs to begin with?
No, earlier on when the prices went up, he didn't have all these other things with him either. Over the last 2-3, these prices have been going up for the last 5 years. During this period, partly his incomes have gone up. This year particularly, as I said, his other expenses have come down and his income tax has given him more money. Now the price has come down by 50,000 rupees, which sets off at least part of the price increase which has taken place. So altogether, it should make a difference to his purchasing ability.
Okay, so that's with regards to where purchasing ability goes. What's the impact, Mr. Bhargav, that you're seeing when you talk about the, vehicles that come under the 40% tax bracket?
We are in the 40% tax bracket also. We sell maybe about 30% of our cars in that tax bracket. Only about 70% of our cars are in the lower tax bracket. And there also we will see a slight price improvement because the tax was 43-45%. That's coming down to 40%. And overall, I think the car industry will benefit to the extent that the slackness in the growth rate will now, I think, change. And we'll see a revival of the growth of the car industry. And it should reach what used to be the normal 7 to 8% a year.
So industry is looking at 7 to 8% kind of growth on the back of this, Mr. Bhargav. But what's the kind of volume growth that you see for Maruti?
I can't tell you the volume at the moment, but all I can say is that we see the growth rate going up and the growth rate for small cars going up to 10% a year, for the overall business going up by about 7 to 8% a year in the course of the next 6 months.
Okay, so overall volume growth is something that the street should be eyeing from here on as well. Mr. Bhargav, the other question we have is, how does compliance change from here on?
It's certainly easier to manage tax now when there are 2 slabs and not so many definitions of what is a paratha and what is a naan and what is what. The lack of discretion which now has been brought in, that things are just one category, is going to make both enforcement, compliance, everything much easier.
I think a la carte is better than the buffet is what you're coming through from here on. Is this an advantage for EVs then, Mr. Bhargav?
No, if anything, it'll make it less attractive. No, because other vehicles have become cheaper. But the electric vehicles are having a special category anyway. 5% is a very comfortable rate of tax.
Okay, so yes, absolutely. You know, EVs do become less attractive because your other vehicles are getting cheaper. Mr. Bhargav, we do remember that you have been slightly lukewarm when it comes to EVs earlier as well, the adoption when it comes to electric vehicles. Do you see that changing from here on?
Both EVs, hybrids are both going to grow over time. That's happening world over. If you look at Europe, you look at America, you look at China, everywhere both EVs and hybrids are growing. It's not one or the other. And I think India will be having the same sort of development in the years to come.
Right, you know, I mean, EVs is something that you should look at. Adoption is the key from here on. But thank you so much, Mr. Bhargav, for joining us on the show.
Let me take you through a couple of these models and let me try and give you a perspective as to what the discounts possibly could be on some of these cars. This is, of course, the Tiguan R-Line, and it has an on-road price of around 62 lakhs, which means that the reduced GST rate will likely give the buyer a cool saving of 4.5 lakh rupees. This is now the Vertis, and again, all of these are 4-meter plus cars. So that's something you want to keep in mind, that these are not the budget cars. This is for around 23 lakhs currently on road. And again, the saving on this would be roughly 1.5 lakhs, which is not bad at all. given the kind of ticket size that the car operates at. This one is the Tygoon, of course, and again very similar ticket size to the Virtus at this point on road. So again, $1.5 lakh odd of saving that we might well see on this one as well. But I'm joined in by Shailesh Bilay, and he has been, of course, he's a veteran, as you'll see as he comes on the screen, and I had a very interesting conversation with him. Sir, you've been, of course, interacting with your customers over the last week or so. What is the sense you're getting? Do you believe that this GST rate cut will egg them on to buy the car? Is this what they are waiting for?
Yes, we do agree with that, because what happened, we interact with the customers, they're taking the test drive, they like the car, in fact they choose the color also, but they're saying just wait for few minutes or few days, because we're expecting GST and it will take a bomb price to us, because we love the car, but we take the advantage, why not? When government is giving to GST subsidies that, so definitely we'll wait and just let me know when the price will come, definitely will come and we'll go for it.
So customers waiting on the price essentially. But Mr. Shailesh, give us this perspective. This price cut, how quickly, what are you doing in terms as a store to try and close the deal? Because that's the other piece which you would really want to do. This period of uncertainty creates a little bit of hesitation for the customer. How are you closing the deal?
What we do the customers, that definitely what we promise we have to give. So you do one thing, you do the pre-bookings. Okay, and whatever benefits are there, now I'm giving the particular price, but whatever price difference is there, definitely will help you out and we'll complete the deal and we'll give that price to you. There's no issues, but book the car, so you'll get the advantage. So last moment should not, मेरे को अभी गाड़ी चाहिए, अभी मेरा मुहूर्त है. Now Dashara is coming nearby.
Yes.
And people are waiting for that because it's an auspicious day and all the automobiles, Dashara is a boom.
Right.
People are buying the car particularly on that auspicious day. But what happened particularly about this, now here, this year we have two problems. One is GST, and Friday onwards, as you know, the Indians are superstitious. So Pitru Paksh starts. So they don't do anything on that. So to avoid that and to get the delivery on auspicious day, what we told the customers that do the pre-booking. So at least whatever price benefit, definitely we'll give you, but at least we can call the car and we'll give you the benefit for that.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you. Green Talk Social Impact Awards 2025, coming soon.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
I think the questions to our next very special guest, Mr. Madhusudan Kela, will be whether this is something that is a landmark move in the Indian economic landscape. Mr. Kela, so good having you. Thank you so much for taking the time out and being with us. And that's my simple question to you, sir. Is this a landmark move in the Indian economic landscape, simplifying the GST structure?
Yeah, it is clearly a landmark move. I would say this is like more than what we normally expect in the budget also, right? Because there is a significant impact which is being done to a lot of sectors, Neeraj. Because if you look at even something like cement, if you are selling a bag for 300 rupees and the price reduction of virtually 10%, will mean it's a very, very meaningful reduction and rationalization across categories. It will help lower middle class and middle class people very, very significantly. I'm assuming government will also monitor that that entire excise reduction will get passed on to the consumer, and that will spur demand. And I'm sure government has done a very calculated move by which they will, the spur in demand itself will partially compensate the loss in GST, and also the GST increase in some things which are being done. So it's a very significant thing. But Neeraj, I would like to say that looking at the mood and looking at what we are also hearing through even people like you, a government seems to be absolutely in a determined mode to take many such measures, and this is of course the most significant one. But I am quite hopeful a lot more will get done, whether it comes to ease of doing business or deregulation into various sectors. Lot more will come.
Mr. Kela, could this, actually that was going to be my next question. The economic scenario as it stands right now with the tariff issues, etc., and maybe they'll get solved as well, but because they have happened, etc., would this have prompted the government to take this one big move and, as you said, a series of other moves? And is that a good enough counter to the slowdown due to tariffs and due to the fact that the global growth scenario is also looking a bit skittish?
I am sure that is what the government is aiming at, Neeraj. And I would like to draw your attention to the fact that, let's say, if we look at our Prime Minister's history over the last 25 years, how he has tackled problems. Whenever there is a problem being thrown upon him, how he has tackled it. I think they have been very, very decisive in tackling issues, and this is clearly, concerning the country. So I am sure they are not only looking at compensating the loss, but they are looking at even more than that in terms of widening our export base to various countries. And we have analyzed, Neeraj, this in detail. It is not as simple as what the world is making out to be, that this is what the American exports are, and this is what the impact of the tariff will be, and this is what the reduction will be, and this is what will be the impact on the GDP. It's not as simple as that. Let me tell you one or two things. One, the duty is being paid on FOB basis and not on CIF in America. So wherever the shipping charges are high, insurance charges are high, the port handling charges are high, that is all not counted in the duty which is being paid by the exporter. That is the point number one. The point number two, in lot of sectors, clearly there is a hit. I am not saying that there is no hit. There is a hit, but let's say in gems and jewelry, for instance, the value addition is maximum 5-7%. So we are importing and then we are re-exporting. So it's not that, the calculation which is going on in the market. I am saying the life is not as simple as those calculations. And I am very sure that if the government continues this path of deregulation, ease of doing business, there is a lot more money which will come into India from domestic as well as international investors. And as our Commerce Minister said even 2 days back, US issue, and that is the indication which has come from there also, US issue will also get resolved. It is not that it will not get resolved. So this, when we look back, Neeraj, maybe 3-6 months later, we will think that this was like a double bonanza, that because of this issue, the government went actually on a overdrive, and they took a number of steps, and that issue also got resolved.
Kela, you've looked at so many cycles, right? And I'm taking a leaf from your last answer. With a presumption that at some point of time the US issue gets resolved, which is good enough for both sides, by the way, I'm sure, and that's how the government will do it. And this GST bonanza, which definitely gives a great boost for consumption in 2026. Does all of this set the way for the FPI flows to return to the markets? Because that is that one missing factor, right? I mean, that the FPI flows are not there, which are competing with the domestics, and which is why the markets are not really rallying at a good pace. Do you think that set the stage for FPI flows to return?
See, FPI flows, Neeraj, if you look at the base is so high, we are again making such a hue and cry about this week 10 days selling, because on a base of, let's say, $800 billion, if there is $5 billion which is being sold, we should not consider that there is a widespread selling by the foreign institutional investors. Obviously, if there are 100 people, few of them will take a view on various things, including the one which we are facing today. But I would not say there is a rampant selling which is going on from all foreign institutional investors. And FPI is not only what is happening in the country, because if the dollar weakens, then clearly the flows will increase. And I am sure, given the growth story of India, and given what steps the government is taking, and once the US issue gets resolved, the FPI flows will surely reverse.
Yeah, point well made. Alex here. I'm just wondering, we've been speaking to people about the implications of a reduction in the rates for a few categories of products. I'm wondering what you think about the second order impact, because we've spoken to a few companies, we've spoken to a few service providers, and what they're also saying is that money saved because of certain reductions will lead to a wider consumption push and move up the value chain, do you anticipate that that will happen soon, or do you think that it will take some time to trickle through? We've spoken about the income tax cut as well, but I think we're still waiting for that consumption push to take place.
I think this will lead to definitely the process being started, and whatever time it takes, it will take. Let's also not forget one very important factor. Because of the reduction in these rates, I am very confident even the compliance will go up, and whoever was doing, let's say, if we call it, still saving up GST through other means, there is much less incentive to do it now because the rates have come down and various categories are being rationalized. So whatever was non-compliant before this rate reduction will also come into the play, and I am sure that is what the government calculation will also be, that whoever is still trying to avoid GST because of higher rates, when the rates gets rationalized, they will also get more complied. And to your point, Alex, this is a move which will not have only a direct impact, but it will have a lot of indirect impact to aid to the growth of the economy.
So then from that perspective, if you are positioning yourself to capitalize on that, Mr. Kela, and I know that you don't build your portfolio to take advantage of small events or big events. You have an ongoing approach to picking stocks, and you look at valuations as well, you look at earnings and various other factors. As you stand today, and I think we can all agree to say that the Indian growth story, particularly based on the trajectory that we've seen in the recent past, is not going anywhere, whether somebody calls us a dead economy or not. So therefore, how are you positioning yourself at this point in terms of sector play and in terms of taking advantage of the consumption boom that we're likely to see?
My friend, what has worked for me has been always two things. We have always been bottom-up investors, and we look at various sectors, whether it is financial services, whether it is pharmaceutical, whether it is consumption. While we like sectors which have got very good tailwinds, and we look for specific companies within those sectors. So, for instance, for consumption sector, this is a big tailwind which has come. But we'll ultimately look at bottom-up ideas and just not buy because the GST rate has happened. So let me just go ahead and buy all consumption stocks. That's never been our approach, or not been an idea. So we will look for bottom-up investing. But what we look more for, that because of this noise, market gives a lot of collateral damage even to companies and the sectors which are logically should not have this much impact, right? And because of that collateral damage, stock prices become attractive on a selective basis, and because we have a structural good view on India over a very longer period of time, we are actually able to take advantage of those corrections. So I will be very vocal. My list is always ready, that this is what I would like to buy, and these are the prices in the range I would like to buy it. And the last 5-7 days, maybe we would have attempted to buy a few names where we are where we were convinced, but the stock prices were not attractive enough. But the once its stocks became attractive, we obviously pulled the trigger. So just to make it very simple, this is clearly a big positive for India as a whole. It's a very good step, and more important, it's the intent of the government to make sure that they are signaling enough that they are very serious about reforms in India. They are very serious about getting and making sure that our economy stays in a growth path. That is what gives me larger conviction that there might be more measures which will come in the next 3-6 months to ensure that we continue to maintain the growth which we have had. And once we have that kind of a conviction, we are clearly only bottom-up investors, and we'll continue to look for those collateral damages which happen in particular stocks. And as and when the prices become attractive and the risk reward becomes attractive, we'll dip in and buy.
Diwali gift, by the way, from Mr. Kela when we do a Diwali conversation with him around the Samvat. But I know he has a hard stop. Mr. Kela, one final question. Sorry, I know you are a hard stop, but just one final question. I heard you say that you believe some more other measures could come in as well because the GST reforms is the first of the many. What else would you believe is a must do or you expect the most to happen in the next 1, 2, 3, 5 months?
So Neeraj, I would say, there are a lot of things, but what has to come is really ease of doing business and ease of living, because that is what is the most important thing. Like, I just read that there are some 18 permissions which are required to do exports. Now, I am sure a lot of them could be cut, and that is what at least I am betting on, that a lot of the deregulation and ease of doing business will happen, and that is what will spur confidence, and that is what will spur investments into India. The scope is there, Neeraj. You and I know it, that the scope is there. It is just that people get caught sometimes. Like the one brilliant step which the government did, like decriminalization of certain items. I am being told that they are going to do decriminalization of more 1,000 items. Now, of course, when you are doing business, you are most scared that you should not get into anything intentionally or unintentionally which has got criminal implication, right? And once these obvious hurdles gets released, and I'm not really hoping that there is something big bang which will happen, but it is that series of steps which will make sure that the ease of doing business and ease of living really improves, and that is what will improve the confidence and lead to higher growth.
Mr. Kela, thank you so much for taking the time out on such a short notice, but such an important day to have your thoughts. Much appreciate, and both Alex and me hope that we speak to you very soon around the new Samvat celebrations.
Thank you so much, Neeraj, and all the best. God bless.
Thank you. That's the big powerhouse voice talking about what these reforms mean.
Gautam Shah joining us next. He's founder Goldilocks Global Research. Gautam, thank you for speaking to us. The pressure is showing. We've opened strong, but staying up there is a bit of a task even now. What are you looking at when you see the index this morning?
Good morning, Tamanna. I think the bigger picture is more important. Yeah. I think a year back, the market realized that at these valuations and the way economy was shaping up, there was no way the markets could have run up. I'm talking about last August, September, when we were close to that levels of 26,000. Thereafter, market men realized that there is definitely a problem with the economy. And probably thereafter, you had the government coming in and understanding the situation and taking a very important decision. So I think this can really kickstart the economy. And if it does it, then the market follows a discounting mechanism. And I think it's going to be up and away, because this is probably the only concern which the market was dealing with. Yes, we had Trump factors, the tariff factor to deal with, but that's also more or less discounted. And I think the price action in the last 10 days has been quite encouraging. So as a technician looking at the charts and trying to tie in the fundamentals, I'm tempted to believe that this move today can be durable, can be sustainable, and could potentially lead to a lot more upside on the upside, because anyway, there is a lot of liquidity waiting on the sidelines wanting to come in. So as you see the first signs of stability, which you are seeing today, I think the markets will sustain. From a numbers perspective, 24,850 for me has been an important resistance. We are trading above it right now. And if we do sustain above it today and close above it, I'm tempted to believe that we will move towards levels of 25,200 and eventually 25,600, the point from where we corrected in the recent past, and eventually go back to lifetime highs. Because let's not forget, the world is still in a bull market. India was not a part of the party. Now, possibly with all that has happened, India can be a participant to that global party as well.
Gautam, all I would ask is that eventually seems like so far away. It's, eventually could mean anything. Eventually can be at any timeline. Is there a timeline you have in mind for reverting to lifetime highs on the Nifty?
Yeah, I think at Goldilocks, we don't play with words. So for us, eventually would mean 3 to 6 months. And I think markets are very fast these days. You know, if they have to go up or go down, liquidity is immense, momentum is great. So it doesn't take time for the markets to do well. So if we do sustain above 850 levels today, I think over the next 3 to 6 months, we could be approaching lifetime highs. But I still maintain my call that this is a stock pickers market. The bigger opportunities are in the mid caps and the small caps. And that's where one should focus upon.
So, Gautam, you know, we were talking about this earlier as well, because FIs are on heavy shorting right now. How important is it for the FIs to cover their short position to achieve this life high levels yet again? Because it's only the DIIs who are supporting right now.
Well, in some sense, I think the FI selling has not been as important as it was maybe a decade back when the Indian bull market was driven by FI flows. Clearly, I think we all know now that domestic flows have taken center stage. But I think, as you rightly pointed out, given the long-short ratio of the FIs and given the government push, I'm tempted to believe that if the economy does come back over the next couple of quarters, which is looking likely, then I think there will be a case for FIs to, look to cover their shorts and probably move out. However, I think there are immense opportunities in US, in China, and world over. So it's not that India is the best investing market in the world, but at least they will be in a position to cover shorts.
Okay. So in this scenario, Gautam, what are the sectors you would look at? Because a few of them already seeing a run up. Let's take auto for analysis. In auto, you have Escorts, M&M, all of these seeing a move of almost around 7 to 8%. Likewise, you have a Aisha, which did not really anticipate a move, but is also trading with some smart gains. Would you still be a buyer at current levels, or you will wait for the heat to settle down right now?
I think the writing has been on the wall for the auto space. I mean, look at what it's done in the last 20 days. It's probably been the best performer. So in some sense, the auto sector knew that something positive is coming. And as I always say, the market is the best judge. And I think this is only the start of a much bigger move for the auto pack. So I'm tempted to believe that the auto index will go back to test lifetime highs. And I think there is easily 15% upside across the board in auto stocks from here. So I would definitely stay committed there. Metals we continue to like. I think I've loved the way the entire metals pack has behaved in the last 10 to 15 days. Look at Hindalco, Nalco, Tata Steel, JSW Steel. I think despite not so great fundamental setup, I think the price action has been encouraging. And I think the time has come for financial services to make a comeback. So insurance companies, housing finance companies, NBFCs, I think that's a big opportunity because 1 month of underperformance in the bank Nifty and everybody's gone negative on it. But I think the bigger story is intact and financial services will make a comeback.
And in this, would you prefer the NBFCs or the private banks? Will you be looking at PSU banks? What is the kind of preference over here?
NBFCs for sure. I think the chart setup is very clear. I think and the RBI governor with all that he's done in the last 6 months and the positivity that he brings to the table is pretty clear that in the interest rate environment that we are expecting, NBFCs will be a big beneficiaries. The problem with the large private banks is that there is still FI selling happening there. I mean, if you have to sell something in India, it has to be the top few banks. That's probably the reason you'll not see a runaway move, but the smaller NBFCs and even the larger NBFCs, I think, are the big opportunity.
Just trying to understand if you'll see FII flows also reverse. Just your thought there, since you mentioned it. FIIs have been moving out for a certain reason, and largely it is a tariff pushed reason and the impact for the Indian economy, markets, etc. Do you see a bit of that getting cut down and reversing?
Well, let's be realistic. We are in a mega bull market worldwide. I mean, look at US markets. Yesterday, Alphabet was up 9%. It just tells you what's happening around the world. The Chinese market is at a 10-year high. Some of the European markets are at lifetime highs and still going very strong. So in this environment, to pick a market like India from an FI point of view, which is expensive, which has some issues around consumption and economy, might not be the best place. So I think let's not pin our hopes too much on FIs making a comeback and driving this market higher. I still want to believe that it will be domestic driven.
Okay. Gautam, a domestic-driven market, what would it mean in terms of where banks go? Because they have been under pressure. Are you seeing a recovery with regards to Bank Nifty, and which are the candidates that you would bet big on now?
for the last 7 to 8 days, we kept highlighting in all our reports that 53,500 is a huge support for the Bank Nifty. Last 4-5 days, we've turned from that number. I'm tempted to believe that a bottom has been made, and there is a high probability of the Bank Nifty gradually moving back to levels of 56 to 57,000. So I think there is definite opportunity. I think a 10% upside on the Bank Nifty over the medium term, say 3 to 6 months, is entirely possible. But I still want to come back to that point that this is going to be a market about mid caps and small caps. That's the place where domestic money is flowing in, and that's the place where FI selling is not happening. And there are a lot of stocks with good valuations, great themes, hotels, travels, power, infrastructure, cement, fertilizer, I think clean energy. I think these are all themes which I think is going to attract a lot of domestic money, and that's where the real opportunity is for the next 6 to 12 months.
Okay, in terms of, I'm just coming back to FMCG for a bit, Gautam, because in terms of volume impact, it's going to be FMCG, right? The mega sort of downtick on rates. And I really liked it when Finance Minister said yesterday, all roti, chapati, paratha, everything is now in one rate. So the direction is very clear that you want to remove all of these unnecessary divisions. Is FMCG a play that you're looking at right now, an HUL and Nestle and ITC, etc.?
Selectively, yes. Let's not forget in the last 1 year, the FMCG index has seen a 25% fall. It's a mirror of the economy. And in the last 1 year, it has seen huge underperformance. But with what has happened in the last 15 days and today's move, it does seem as if at least the bottom has been made. But will it generate alpha over the next 3 to 6 months? I don't think so. I think the bigger opportunity is going to be in some of the other sectors, because many of these FMCG companies, consumption companies are still very richly valued. So just to expect them to start getting into a new trend because of the GST push in anticipation of consumption picking up, I don't think might be the right strategy. I would still go with some of the top stocks in auto, where I think the visibility is much better.
And what is the pecking order in these top stocks in auto?
Well, I don't want to talk about specific names here, but I think some of the top four-wheeler stocks is something that we like, and I think across the board, the top 5 names will stand out.
Okay, thank you so much, Gautam, for speaking with us. Fast and furious was that interview, as well as was the timeline of the GST decision. Thank you so much for speaking with us today.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you. Green Talk Social Impact Awards 2025, coming soon.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
The markets move fast.
And so should your portfolio. Expert.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacy.
What is an extremely important conversation. It comes at a time when India is making landmark progress in terms of our economic development. There is a program now, a process which is taking place with regard to GST, and we're going to be talking to Piyush Goyal about that. I'll just do that one more time. Let's start once again. Okay. Well, it's been less than 24 hours since GST 2.0 has been underway. It promises a landmark step, a landmark series of measures which benefit millions of people across the country. It's a step which doesn't just kickstart economic growth, it fuels consumption in a very big way. It could have an impact on our overall GDP numbers. Joining us to discuss this, the Minister Piyush Goyal. Thank you very much for being with us. Since there are people across the country watching this, in simple terms, how was it a priority of this government to ensure that millions had a little bit more to spend at one level?
At the outset, I'd like to thank Prime Minister Narendra Modi for this historic decision to reduce GST on such a wide plethora of goods and services, particularly those that affect the common man, women, youth, farmers, MSMEs. Because the way he has very systematically, over the last 11 years, changed a fragile 5, completely devastated economy into the world's top 5 economies. Well on track to become the 3rd largest GDP by 2027. Today, the world's fastest growing large economy for the last 4 years. Clearly reflecting a renewed confidence and a renewed ability, thanks to strong macroeconomic fundamentals, to be able to carry out a step as transformational as this reduction in GST. This has been done to a plan. It's not as if it's an overnight decision. Obviously, you will realize that when such a large number of changes are done to rates, rationalization of rates, processes, simplification of procedures, it's a labor of love of many, many months. Officers, groups of ministers from the states, the central government, everybody has worked on this. And I think it's a series of steps being taken to strengthen the economy. You saw the income tax reduction of rates and increase in slabs without payment of tax. Now up to 12.75 lakhs for a salaried person and 12 lakhs otherwise also. A person doesn't have to pay any income tax, and that has given a huge relief to the middle class. This step coming so soon thereafter is an icing on the cake. It in a way gives a big boost to consumption demand, coupled with the huge investments the government is doing on infrastructure spending. The 2 pillars, infrastructure spending and consumption demand, collectively making up the GDP, and with a huge multiplier impact in terms of growing demand leading to higher production, particularly now the demand for Swadeshi goods. India-made goods is also becoming current coin. More and more people are now...
I see you're doing away with Coca-Cola and aerated drinks, you put them at 40%.
Well, I wouldn't like to comment on that, but the idea is to promote domestic goods. And I'm very confident that the cumulative effect of all these transformational initiatives, and many, many more to come, this is just the beginning of the next generation reform.
Is this going to boost our GDP growth?
Well, GDP growth has consistently been high. We have been able to bring inflation down to 1.55%. It will clearly have a very positive impact on GDP growth. It will clearly help us to sustain the momentum. And over the next few years in the Amrit Kal, our effort to take a $4 trillion economy to a $30 trillion economy by 2047, bring greater prosperity to the last man at the bottom of the pyramid, ensure that 140 crore Indians get a better quality of life, they have ease of living, their children get high quality healthcare, education, good opportunities in life. This mission that Prime Minister Modi has set out on will get a huge impetus with this reduction and rationalization and reform of GST laws.
This comes obviously at a time when there are those sanctions and tariffs upon India 50%. The textile sector is one which has been potentially vulnerable in the face of these sanctions. And there are benefits for the textile sector as far as GST is concerned. Was the timing of this in a sense done to help those who might have been impacted?
As I mentioned, this is certainly not something you can do overnight. The tariffs.
But you could announce it at this time.
No, we've been working on it for a long time, and periodically it has been publicly known also
of course,
that this is going to come in. On 15th August, we got a flavor with Prime Minister committing and promising to give a huge Diwali gift. And there you are. He always delivers on his promises. And with Navratri coming up on 22nd, the festive season starting on 22nd September, I think the timing is just right. It's coincidental that we have certain sectors affected by high tariffs from another country, and this will ameliorate their impact quite a bit. For example, textiles is one of the biggest gainers.
Yes.
Footwear and leather is one of the biggest gainers. So our food products, the amount of benefit that farmers and the entire value chain in food products will get is humongous. All of this will lead to greater purchasing power in the hands of the common man. It'll be a big relief to our consumer spending costs and will help many sections of society to go in for things which they would otherwise not have been able to afford. So whether it's two-wheelers or cars, whether it's white goods like air conditioners and refrigerators, whether it's beauty salon products, cosmetics or our day-to-day requirements, textiles, footwear, furniture, paper, you name the product, and there is a benefit accruing. Affordable housing will get a big boost, which means more jobs, more business opportunities, with cement coming down from 28 to 18%. Pharmaceuticals is one of the biggest beneficiaries. Life-saving drugs are down to zero. Many products in the pharma industry, medical devices have been given lower GST rates. So it's a very holistic, well thought out new regime that has been brought in. Certainly cannot be done to time it with a tariff imposed on 27th of August.
But that said, it does benefit those sectors which are impacted, and so it helps in that sense. Where is the situation with talks on America and trade? And I will not believe at this point because I think GST is the focus.
Talks never happen with the media. But I can tell you the US-India relationship is very consequential. It's a very strong and powerful friendship. We have been allies for far too long. We've had blips. We had the sanctions post the nuclear tests in '98. We overcame that. And I'm very sure that this relationship is very sustaining and long-term and will continue to grow.
And there is no compromise on our autonomy, which in this case is linked to the import of Russian oil.
I think 140 crore Indians know that Prime Minister Narendra Modi stands tall and strong to protect national sovereignty and national interests.
From an economic standpoint, there is a great deal of hypocrisy in what's happening, not just about America, but if you look at Europe. A lot of our refined oil products are going to Europe. They're going to other parts of the world. And yet, China imports more Russian oil than us. And yet, it's India which is being targeted in this manner.
Well, I think the foreign
Does that not make your job tougher? I mean, I know what the foreign ministry has said. I can narrate to you the words that they have said. But you deal with a huge aspect of our economy.
Well, the foreign minister and the ministry has very categorically brought the facts on the table. And I'm sure once the facts are appreciated, it will have its own resonance on the trade talks also.
Let's get back to GST and the huge announcement yesterday. What I found really interesting is insurance, and the fact that the common person who doesn't invest in insurance because it might just have been too pricey for him or her is now incentivized to do that. And that saves lives ultimately. I mean, that's what it all boils down to. How is this a critical part of the GST reform?
If you see Prime Minister Modi's track record of 11 years, he has been very focused on social security. You will recall right in the first year he started the Atal Pension Yojana so that the unorganized sector can also buy a pension scheme, and government was contributing a large part to that pension scheme also. He had come out with accident insurance at a very nominal cost so that people get security in case of an unforeseen disaster in the family. He brought in Ayushman Bharat, and then last year he gave it to everybody above the age of 70, irrespective of income. So effectively we now have over 60 crore people entitled to free healthcare. So giving social security to the common man and ensuring social security for 140 crore Indians has been very high on the agenda of the Honorable Prime Minister. If you recall, one nation, one rank, one pension. Now, that was a demand of the armed forces for decades.
Yes.
But it was Prime Minister Modi in 2014 who actually implemented it and is periodically resetting it so that our armed forces get a respectable pension for their services to the nation. And I can recount so many more steps towards security of the people of India. I think this reduction from 18% to 0 on both life and health insurance is an effort to ensure that even the middle class and those who take out Mediclaim policies or life insurance policies are not burdened by taxes but are encouraged to provide for their old age or provide for social security, whether in a health emergency or in an unfortunate tragedy in the family.
The former Finance Minister P. Chidambaram tweeted today, he said, and I quote, "One is left with the thought that these steps are 8 years too late." He says that the design, and I quote, "the design of the GST and the initial rates were wrong, but the government turned a deaf ear." How would you respond?
Well, I think Mr. P. Chidambaram is only reminding the people of India about his own failures when he makes such a tweet. He's reminding the people that from 2004 to 2014, for 10 years, his government miserably failed to introduce the GST, which was started, by the way, by Mr. Vajpayee.
Yes.
Unfortunately, he didn't win in 2004. Otherwise, GST would have happened many years ago. And throughout the UPA government, we continued to have over 35 different types of taxes, duties, and levies. The cascading effect of these multiple taxes, the humongous paperwork and the problems business and industry had to go through was terrible, but they could do nothing about it. When they tried to introduce GST, the states demanded protection or some kind of security. Mr. Chidambaram did not offer that, and he failed to introduce GST. Prime Minister Narendra Modi had the confidence in being able to turn around a broken economy which he inherited from the UPA and Congress, so that he could offer 5 years of 14% growth in GST collection. 14% from their then collection in 2017. Every year. So compounding, you can imagine how much it became, almost doubles in 5 years. But he took that, took that bullet on. His broad shoulders were able to carry the compensation commitment. He made sure every state got compensation. Even during COVID, when revenues were down, he compensated them with a 14% growth. And now that the compensation is getting completed, the loans taken to pay off the COVID period compensation are now getting over, it gave the Honorable Prime Minister elbow room to be able to bring down taxes further. Having said that, I'd like to remind you, Vishnu, right from 1st July 2017, when GST was introduced, from day one, the cumulative impact of GST was less than the pre-2017 tax. And then periodically has kept reducing these taxes. In 18 alone, he reduced over 100 products GST, sanitary pads and so many others. And this one, of course, is game-changing. This transformational. It'll have a huge impact in the lives of the common man, and it'll take the economy to newer heights.
But there's a fundamental assumption over here that companies, manufacturers will pass on the savings to consumers like you and me. How is anti-profiteering a built-in goal in this GST 2.0?
Of course, the law does provide enough ability for the taxman to look into the books and ensure that the net effect is passed on to the consumers. But Prime Minister Narendra Modi believes in trusting the people of India. You must have seen right from 2014, he has tried to reduce the compliance burden. Over 41,000 compliances have been reduced. He's tried to remove all obsolete laws, and that process continues. He has decriminalized several laws, trusting that the people of India will not do, and sometimes if a small mistake happens, you don't put a person in jail. So we had Jan Vishwas bill, by which many provisions of the law were decriminalized. Jan Vishwas 2 was tabled in the parliament and is before a joint committee now to be appointed by the Honourable Speaker, in which 355 more provisions will be decriminalized. We are working on many more steps for ease of doing business. Our basic ethos of Prime Minister Modi's government is trust. People trust Prime Minister Modi, therefore he trusts the people of India. It's a two-way trust, and therefore we are confident. I'm in dialogue with several industry associations. All have committed, all without exception, that they will ensure full pass-on of the benefit of GST reduction, and they have thanked the Honourable Prime Minister for reposing such faith and confidence in Indian business. They have all committed to promote and invest further Make in India so that we can have more and more Swadeshi goods. And as consumers, I think 140 crore Indians today have resolved that wherever possible, we will only use Swadeshi goods so that our brothers and sisters get more opportunity, get more jobs, get more income, and the nation can grow in an inclusive fashion where everybody benefits.
Then there's the demerit tax. It's also called the sin tax. I know the government has not called it the sin tax per se, but that word has gone around. There are those who suggest, and it's not my opinion, so don't come down harshly on me, that the government shouldn't be deciding what is sinful for a citizen. In this case, obviously, tobacco consumption. But then, of course, there is the entire issue of the wellness of our citizens. There's an ethical issue, there's a health issue, there's an economic issue. How do you look at this?
You know, very often what is good for a person is not recognized by him on himself. You need to tell him that. So when you go to see a movie, after all, don't you see that advertisement which shows you the impact
really
of cancer, which you can get by chewing tobacco or smoking cigarettes and cigars? We are all aware how much obesity and sugar and blood pressure and all these problems, how fast they are growing in the nation. Prime Minister Modi has consistently talked about preventive healthcare. It's not only curative, but preventive healthcare and wellness. That India should be a fit India, healthy India, has been his thinking always. And I think towards that end, he has taken a very wise decision. Sometimes you've got to help people understand what's good for them. And I think this is a small effort to also ensure that consumption of these goods are at the cost and risk of the person. I think more and more people will become aware that these are not good for them. That is in the best interest of the country.
A final question. There's a lot which is aspirational also. Air conditioners, which were considered a luxury item and which the governments, all governments have called a luxury item in the past, is now called aspirational. And I suggest that that's what it is. It is aspirational. In so many senses, it's a realistic requirement. The tax structure on that has come down a great deal. the tax structure on cars of a certain size and length has come down as well.
The common man's car.
And that obviously appeals to a massive middle class, which is earning and
two-wheelers
and two-wheelers under 350cc as well. So how is that a key focus also?
Well,
young people working, getting into it.
We are really very proud of the middle class of this country. They have become middle class. They have come up the ranks. 25 crore people have come out of poverty and have come into the middle class during Prime Minister Modi's regime, the highest ever in a decade. And the middle class contributes immensely to the economy. They contribute through their work, they contribute through their sheer talent and skill. The middle class also drives the economy forward. And they deserve to get a good deal. Therefore, the income tax up to 12 lakhs was made zero.
Yeah.
Or 12,75,000 for salaried income earners. Yeah. Now with this GST reduction, they'll also have the ability to improve their quality of life. And this is a continuous effort Prime Minister has had for 11 years. And will continue to have for another 22 years till we reach the goal of Viksit Bharat in 2047. Yeah. So I think this country will be eternally grateful to Prime Minister Narendra Modi. This country will see rapid transformation further towards ease of doing business, towards ease of living. Decriminalization will be accelerated. We will focus on certain sectors so that growth opportunities increase. We'll focus on making sure there's inclusive growth and sustainable growth in the country. I think this is the beginning of a virtuous cycle of growth, which Prime Minister Modi has taken it upon himself to offer the people of India in the next 22 years as we grow from a $4 trillion economy to a $30 trillion economy. The nation will make sure that every child born in India will be a proud citizen of India, will have a good quality of life, a prosperous life. The nation will certainly fulfill Mahatma Gandhi's mission of Swachh Bharat, Mahatma Gandhi's mission of Swadeshi Bharat. Right. I think every single program Mahatma Gandhi had promoted, Prime Minister Narendra Modi is taking forward his vision, his mission, and I think the nation today stands behind Prime Minister Modi as one united nation supporting Prime Minister Modi's efforts.
Well, there's a lot over there in the GST. Thank you so much, sir, for speaking to us. Let's hope it works out and it spurs consumption, which is what the big goal is. Well, there you have it, the Minister Piyush Goyal, someone who's known really about what the overall goal over here is. It's called GST 2.0. The fact that it's been accepted in this manner across the country, across states, is an indicator that the need to simplify the structure, bring it down to 2 tax slabs, and the big effort at trying to spur consumption as a means of driving growth, but also helping millions of citizens across our country remains a huge priority.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you. Green Talk Social Impact Awards 2025, coming soon.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, Raw conversation. Resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
The markets move fast.
And so should your portfolio. Expert
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So viewers, GST Council's Diwali Dhamaka has helped the benchmarks notch a good session today. Nifty managed to end the day above 24,700 levels. Sensex also jumped more than 170 points. Advanced decline ratio was tilted in favor of the declines. The sectoral picture was mixed. Defense, PSU, bank and IT were the top losers. Auto, consumption and finance were the top gainers. M&M, Bajaj Finance and ICICI Bank were the top contributors. A festive season win for the auto sector. Tractors now face a reduced GST of 5% from 12%. Now this is boosting the affordability for brands like Mahindra and Mahindra. Small petrol cars under 1200cc and diesel cars under 1500cc, both up to 4 meters, which has dropped from 28% to 18%, benefiting Maruti and Hyundai. Now, two-wheelers up to 350cc also see a GST cut from 28% to 18%, helping Hero Moto and Bajaj Auto. However, luxury cars now face a 40% GST, but the cess gone, so they are slightly cheaper. A big boost for construction this festive season. The GST Council has slashed the GST rate on cement from 28% to 18% under the new two-slab system. Now, this cut is expected to lower the cement prices by 25 to 30 rupees per bag. Anti-profiteering rules ensure that these savings reach customers. The industry, including giants like Ultratech and Ambuja, stands to gain as they can now implement price hikes more effectively. So dealers might keep low inventory during this transition. A game changer for affordable insurance this festive season. The GST Council has scrapped the 18% GST on health and life insurance premiums effective September 22. So previously, customers paid 118 rupees including the tax, but now expect a 18 rupee discount, bringing costs down by 15%. Now this could spark higher demand as volumes are likely elastic. Reinsurance also gets a GST exemption, boosting the sector. So companies like LIC and ICICI Prudential are set to benefit.
Big relief when it comes to healthcare as well. So GST Council has cut the GST on medicines from 12% to 5% effective September 22. Now select high value medicines now face zero GST, which is down from 12%. Now the inverted duty structure persists with the APIs at 18% and also finished products at 5%. So a new GST refund process for unutilized credits will ease the working capital for pharma firms. Companies like Sun Pharma and Cipla stand to benefit. Not just medicines, the GST revamp is a game changer for healthcare hospitals and diagnostic firms as well. So these firms now exempt from charging GST on services. Previously, they paid 5%, 12% or even 18% GST on inputs like equipment and consumables, which couldn't be reclaimed. So most inputs have shifted from 12% to 5% GST, delivering 7% cost saving. So this could boost EBITDA margins by 100 to 150 basis points. The GST Council has slashed rates on consumer durables like air conditioners, dishwashers and TVs above 32 inches from 28% to 18% effective September 22. Now this move is set to lower the prices by 8 to 10%, now making these appliances more affordable. So companies like Blue Star, Voltas and Symphony are poised to benefit as demand surges. The simplified two-slab GST structure also aims to boost festive sales and ease the tax burden on consumers. A major boost for travelers. The GST Council has slashed GST on hotel rooms with tariffs up to 7,500 rupee per day from 12% to 5% effective September 22. Now this applies without input tax credit, making stays more affordable for budget and mid-market travelers. So industry leaders like Radisson and FHRAI says that this will drive domestic tourism, also increase the occupancy and boost India's hospitality sector. So beneficiaries include chains like Radisson, Taj and Lemon Tree. Macquarie has initiated coverage on Keynes Tech with an outperform rating, seeing further upside despite its lofty 146 times price to earnings multiple. Now the electronic manufacturing services firm trading at 6,780 rupees benefits from a massive $1 trillion global EDSM opportunity. Now the key drivers include aggressive international expansion, backward integration and also value-added services like ODM and OSAT facilities. So a recent 1,600 crore rupees of capital raise provides dry powder for acceleration. Now, while PM Modi's mention of its Gujarat chip plant boosts the prospects, Macquarie targets 7,700 rupees, implying 14% upside, with revenue projected to hit around 9,000 crore rupees in 3 years. Electronic Smart India shares have risen for the fifth consecutive day between an intraday high of 155.65 rupees and also a low of 134.9 rupees. The stock has witnessed exceptionally high trading volumes with over 5.46 million shares traded, a surge of 4,627.95% compared to its 5-day average of about 1,15,590 shares. Now, the previous session saw the shares close up 4.10% and also at rupees 130.75. The stock recently hit a 52-week high of 225 rupees and a low of 110 rupees. Currently, it's trading at 31.58% below its high, but nearly 40% above its low. So market capitalization stands around 5,923 crore rupees. Max Financial Services shares plummeted 3.50% to 1,560 rupees. Now, this is marking the steepest single-day drop in 9 months amid broader market volatility. The stock hit an intraday low of 1,560 rupees after touching a high of around 1,650 rupees. So, with trading volume surging 129% to 1,254 shares against a 5-day average of 5,435. Now, this follows a modest 0.46% decline to 1,616 rupees in the prior session. The 52-week range stands at 1,678 high on August 26, and also 972 rupees, which is low on March 4th. So leaving the stock 7.08% below its peak and also 60.4% above the trough. Now, market capitalization is at 53,837.9 crore rupees. Ramco Cements has commissioned an 8 megawatt waste heat recovery system at its Ramasamy Rajanagar cement plant in Virudhi Nagar, Tamil Nadu, enhancing the sustainable power generation. Now, this addition elevates the plant's WHR capacity from 2 megawatt to 10 megawatt, while the company's total WHR power generation surges to 53.15 megawatt from 45.15 megawatt. Now, the move aligns with Ramco's green initiatives, reducing the reliance on conventional energy and also cutting emissions amid plans for further expansions. Earlier, a 2 megawatt WHR turbine was also added at Alathiyur in January 2025. The commissioning supports India's push for eco-friendly cement production, with Ramco targeting 68 megawatt overall WHR by FY26. Now, shares have risen 1.2% on the news, reflecting investor confidence in the firm's sustainability efforts. Bharat Heavy Electricals has secured a significant order worth rupees 2,600 crore rupees from MB Power for the supply of key
गरीब, न्यू मिडिल क्लास, किसान, महिलाएं, स्टूडेंट्स, नौजवान सभी को जीएसटी टैक्स कम करने से जबरदस्त फायदा होने वाला है। पनीर से लेकर के शैम्पू साबुन तक सब कुछ पहले से कहीं सस्ता होने वाला है, और इससे आपको महीने का खर्च, रसोई का खर्च भी बहुत कम हो जाएगा। स्कूटर, कार पर भी टैक्स कम कर दिया गया है। इसका बहुत फायदा उन नौजवानों को होगा जो अभी अपनी नौकरी शुरू कर रहे हैं। जीएसटी कम करने से घर का बजट बनाने और अपनी लाइफस्टाइल अच्छी करने में भी आपको मदद मिलेगी। साथियों, कल जो निर्णय हुआ ये कितना सुखद है, इसका असली प्रभाव तब और पता चलेगा जब आप जीएसटी से पहले के टैक्स दरों को याद करेंगे। कभी कभी क्या होता है, पता ही नहीं रहता है कि अच्छा पहले ऐसा था, और इसलिए कभी कभी पहले की चीज याद करते हैं तब पता चलता है यहां से यहां चले गए। अब आपके घर परिवार में भी बच्चा 70 मार्क लाता है स्कूल में आपके यहाँ, और 70 का 71, 72, 75 करेगा ध्यान नहीं जाता है, लेकिन हम 99 कर लें तो तुरंत जाता है कि हर कुछ कमाल है इसने। तो मेरा कहना यही है कि साथियों, साल 2014 से पहले करीब करीब हर सामान पर उस समय की जो सरकार थी, मैं किसी सरकार की आलोचना करने के लिए नहीं यहां आया, लेकिन एक आप टीचर हैं तो कंपैरिजन आप बड़े आराम से कर सकते हो और बच्चों को बता भी सकते हो। उस समय कितनी बड़ी मात्रा में टैक्स लिया जाता था पुरानी सरकार में। 2014 में मेरे आने से पहले रसोई का सामान हो या खेती किसानी से जुड़ी चीजें हो या फिर दवाइयां और यहां तक जीवन बीमा भी, ऐसी अनेक चीजों पर कांग्रेस सरकार अलग अलग टैक्स लेती थी। अगर वही दौर होता, अगर आज आप 2014 के हिसाब से होते तो आपको 100 रुपया की अगर चीज कोई खरीदते हैं तो 20-25 रुपया टैक्स का देना पड़ता है, अगर उस समय का हिसाब लगाए तो। लेकिन अब आपने मुझे सेवा का मौका दिया है। भाजपा सरकार में, एनडीए सरकार में हमारा जोर इस बात का है कि बचत कैसे ज्यादा से ज्यादा हो, परिवारों का खर्चा कम कैसे हो, और इसलिए अब जीएसटी में इतनी ज्यादा कटौती कर दी गई है। साथियों, कांग्रेस की सरकार ने कैसे आपका मंथली बजट बढ़ाया हुआ था, ये कोई भूल नहीं सकता है। टूथपेस्ट, साबुन, हेयर ऑयल, इन पर 27% टैक्स। आज आपको याद नहीं होगा, लेकिन आप देते थे। खाने की प्लेट, कप प्लेट, चम्मच, ऐसे सामान पर 18 से लेकर के 28% टैक्स हुआ करता था। टूथ पाउडर 17% टैक्स। यानी रोजमर्रा की ऐसी हर चीज पर उस कांग्रेस के जमाने में इतना सारा टैक्स लगता था। हालत ये थी कि कांग्रेस वाले बच्चों की टॉफी पर भी 21% टैक्स लेते थे। ये कभी उस समय अखबार में आपका ध्यान गया होगा कि नहीं, वो पता नहीं। मोदी ने किया होता तो बाल नोच लेते। साइकिल जो देश के करोड़ों लोगों की रोज की जरूरत है, उस पर भी 17% टैक्स हुआ करता था। सिलाई मशीन लाखों लाख माताओं बहनों के लिए स्वाभिमान और स्वरोजगार का एक जरिया है, यंत्र है। इस पर 16% टैक्स होता था। मिडिल क्लास के लिए घूमना फिरना तक कांग्रेस ने बहुत मुश्किल कर दिया था। कांग्रेस राज में होटल के कमरे की बुकिंग पर 14% टैक्स और उसके ऊपर कई राज्यों में लग्जरी टैक्स लगता था, वो अलग। अब ऐसे हर सामान और सर्विस पर सिर्फ और सिर्फ 5% टैक्स लगा करेगा। अब आपको ध्यान में आता है ये 5% में क्या बनना, कोई तो लिखेगा ओ अभी भी मोदी 5% लेता है। होटलों में 7,500 रुपया के कमरों में भी 5% ही टैक्स लगने वाला है। ये काम किया है आपने, काम करने वाली सरकार चुनी, वैसी भाजपा एनडीए सरकार ने किया है। साथियों, पहले अक्सर ये शिकायत रहती थी कि भारत में इलाज बहुत महंगा था। छोटे छोटे टेस्ट तक गरीब और मिडिल क्लास की पहुंच से बाहर होता था। कारण ये था कि कांग्रेस सरकार डायग्नोस्टिक किट जो पर होती है उस पर 16% टैक्स लेती थी। हमारी सरकार ने ऐसे हर सामान पर टैक्स को सिर्फ 5% कर दिया है। साथियों, कांग्रेस के राज में घर बनाना बहुत ही महंगा काम था। क्यों? क्योंकि सीमेंट पर कांग्रेस सरकार 29% टैक्स वसूलती थी। जैसे तैसे घर बना भी लिया तो एसी और टीवी या पंखा कुछ भी लाना है वो भी महंगा हो जाता था, क्योंकि कांग्रेस सरकार ऐसे सामानों पर 31% टैक्स वसूलती थी, 31%। अब हमारी सरकार ने ऐसे हर सामान पर टैक्स को 18% कर दिया, करीब करीब आधा कर दिया है। साथियों, कांग्रेस राज में किसान भी बहुत दुखी थे। 2014 से पहले किसान की खेती लागत अधिक थी और लाभ बहुत कम था। कारण यह था कि खेती किसानी के सामान पर भी कांग्रेस सरकार बहुत अधिक टैक्स वसूलती थी। ट्रैक्टर हो या सिंचाई के उपकरण हो, हाथ के औजार हो, पंपिंग सेट्स हो, ऐसे उपकरणों पर 12 से 14% तक टैक्स लिया जाता था। अब ऐसे अनेक सामानों पर जीएसटी 0 या 5% कर दिया गया है। साथियों, विकसित भारत का एक और स्तंभ है हमारी युवा शक्ति। हमारे नौजवानों को ज्यादा रोजगार मिले, जो छोटे मोटे बिजनेस में हैं उनको आसानी हो, ये भी सुनिश्चित किया गया है। हमारे जो ऐसे सेक्टर हैं जिसमें सबसे ज्यादा लेबर लगती है, उनको जीएसटी की कम दरों से बहुत बड़ा सहारा मिलने वाला है। टेक्सटाइल हो, हैंडीक्राफ्ट हो, लेदर हो, इसमें काम करने वाले साथी, इस बिजनेस से जुड़े साथियों को बड़ी मदद मिली है। इसके साथ साथ कपड़ों और जूतों की कीमतों में भी बहुत कमी आने वाली है। हमारे स्टार्टअप्स, एमएसएमई, छोटे व्यापारी, कारोबारियों के लिए टैक्स तो कम हुआ ही है, साथ ही कुछ प्रक्रियाओं को भी सरल किया गया है। इससे उनकी सहूलियत और बढ़ेगी। साथियों, नौजवानों को एक और फायदा फिटनेस के सेक्टर में भी होने वाला है। जिम, सैलून, योगा जैसी सर्विसेज पर टैक्स कम किया गया है। यानी हमारा नौजवान फिट भी होगा और हिट भी होगा। और मैं आपको याद दिला दूं, सरकार आपकी फिटनेस के लिए इतना कुछ कर रही है, तो एक बात मैं बार बार कहता हूं, अब तो ऐसे लोग हैं डेली 200 लोगों से बात करते हैं आप लोग। आप लोगों को मेरी बात जरूर बताइए कि मोटापा हमारे देश के लिए बहुत चिंता का विषय है, इसलिए खाने का तेल 10% कम करने से शुरुआत करें। मोहम्मद जी, आप मेरा एम्बेसडर बन जाइए। ओबेसिटी के खिलाफ लड़ाई कमजोर नहीं पड़नी चाहिए। साथियों, अगर जीएसटी में हुए इस रिफॉर्म्स का अगर मैं सार बताऊं तो यही कह सकता हूं कि इससे भारत की शानदार अर्थव्यवस्था में पंचरत्न जुड़े हैं। पहला, टैक्स सिस्टम कहीं अधिक सिंपल हुआ। दूसरा, भारत के नागरिकों की क्वालिटी ऑफ लाइफ और बढ़ेगी। तीसरा, कंजम्पशन और ग्रोथ दोनों को नया बूस्टर मिलेगा। और चौथा, ईज ऑफ डूइंग बिजनेस से निवेश और नौकरी को बल मिलेगा। और पांचवा, विकसित भारत के लिए कोऑपरेटिव फेडरलिज्म यानी राज्यों और केंद्र की साझेदारी और मजबूत होगी। साथियों, नागरिक देवो भव ये हमारा मंत्र है। इस वर्ष सिर्फ जीएसटी में ही कमी नहीं की गई, इनकम टैक्स में भी बहुत कम किया गया है। 12 लाख रुपए तक की इनकम पर टैक्स को जीरो किया गया है। आजकल तो आप आईटीआर फाइल कर रहे हैं, तब इस फैसले का सुखद एहसास और भी अधिक होता है कि नहीं, यानी इनकम में भी बचत और खर्च में भी बचत। अब ये डबल धमाका नहीं है तो क्या है। साथियों, आजकल महंगाई की दर भी बहुत निचले स्तर पर है, नियंत्रण में है। और यही तो प्रो पीपल गवर्नेंस है। जब जनहित और राष्ट्रहित में फैसले लिए जाते हैं तब देश आगे बढ़ता है। और इसलिए ही आज भारत की ग्रोथ करीब करीब 8% है। यानी दुनिया में हम सबसे तेज गति से ग्रो कर रहे हैं। ये 140 करोड़ भारतीयों का सामर्थ्य है, 140 करोड़ भारतीयों का संकल्प है। और मैं आज देशवासियों को फिर कहूंगा, भारत को आत्मनिर्भर बनाने के लिए रिफॉर्म्स का ये जो सिलसिला चलता रहेगा वो रुकने वाला नहीं है। साथियों, भारत के लिए आत्मनिर्भरता ये कोई नारा नहीं है, इस दिशा में ठोस प्रयास हो रहे हैं। मेरी आप सभी से, देश के सभी शिक्षकों से भी अपेक्षा है कि आत्मनिर्भर भारत के महत्व का बीजारोपण, इस विचार की सीढ़ी निरंतर हर विद्यार्थी में करते रहें। आप ही हैं जो बच्चों को बहुत सरलता से उनकी अपनी भाषा और बोली में भारत के आत्मनिर्भर होने के महत्व को समझा सकते हैं। और आपकी बात वो मानता भी है। आप उन्हें बता सकते हैं कि दूसरों पर निर्भर रहने से देश कभी उतनी तेजी से आगे नहीं बढ़ सकता जितना उसका सामर्थ्य होता है। साथियों, भारत के आज के विद्यार्थियों और आने वाली पीढ़ियों में एक सवाल शुरू से ही प्रचारित और प्रसारित किए जाने की जरूरत है। ये हमारा कर्तव्य है जी। मैं चाहता हूं असेंबली में भी इसकी चर्चा हो। कभी कभी तो एक प्रयोग करके देखिए आप, कभी हमें पता ही नहीं होता है कि हमारे घर में विदेशी चीजें कैसे घुस गई है, पता ही नहीं है। इरादा नहीं है कि मुझे विदेशी चाहिए, नहीं, पता ही नहीं है। बच्चे परिवार में बैठ करके एक सूची बनाएं कि सुबह उठने से दूसरे दिन सुबह तक उपयोग में आने वाली कितनी चीजें विदेशी हैं, उसे पता ही नहीं है। हेयरपिन भी विदेशी आ गई है, कंघा भी विदेशी आ गया है, पता ही नहीं उसको। जागरूकता आएगी तो कहेगा अरे यार भाई, मेरे देश को क्या मिलेगा। और इसलिए मैं मानता हूं कि आप पूरी नई पीढ़ी को आंदोलित कर सकते हैं। जो काम महात्मा गांधी जी ने किसी समय हमारे लिए छोड़ा है, अब पूरा करने का सौभाग्य हमें मिला है और मैं चाहता हूं कि हम लोगों ने करना चाहिए। और मैं बच्चों के सामने हमेशा एक बात उनको प्रेरित करते हुए कहता रहूं, मैं ऐसा क्या करूं जिससे मेरे देश की किसी न किसी आवश्यकता की पूर्ति हो। ये चीज है मेरे देश में नहीं है, नहीं मैं करूंगा, मैं कोशिश करूंगा, मैं मेरे देश में लाऊंगा। अब आप कल्पना कीजिए, हमारे देश में आज भी 1 लाख करोड़ रुपया का खाने का तेल बाहर से लाना पड़ता है। खाने का तेल। हम कृषि प्रधान देश हैं। या तो हमारी लाइफस्टाइल, या हमारी आवश्यकताएं, या हमारी मजबूरियां, तो ऐसी बहुत सी चीजें हैं। देश को आत्मनिर्भर बनाना ही पड़ेगा। अब 1 लाख करोड़ रुपया बाहर जाता है, वो यहीं रहता तो कितने स्कूल के बिल्डिंग बन जाते, कितने बच्चों की जिंदगी बन जाती। और इसलिए आत्मनिर्भर भारत की बात को हमने अपना जीवन मंत्र बनाना पड़ेगा और हमने नई पीढ़ी को उसके लिए प्रेरित करना पड़ेगा और देश की आवश्यकता के साथ खुद को जोड़ना चाहिए। ये बहुत जरूरी है। ये देश ही है जो हमें कहां से कहां पहुंचाता है। ये देश ही है जो हमें इतना कुछ देता है। इसलिए हम देश को क्या दे सकते हैं, देश की किस जरूरत को पूरा कर सकते हैं, ये हर विद्यार्थी के मन में, हमारी नई पीढ़ी के मन में जरूर रहना चाहिए। साथियों, आज भारत के स्टूडेंट्स में इनोवेशन के प्रति, साइंस और टेक्नोलॉजी के प्रति नया रुझान पैदा हुआ है। इसमें बहुत बड़ी भूमिका चंद्रयान की सफलता ने निभाई है। चंद्रयान ने देश के बच्चों को साइंटिस्ट बनने के लिए, इनोवेटर बनने के लिए प्रेरित किया। अभी हमने हाल ही में देखा, स्पेस मिशन से लौटे ग्रुप कैप्टन शुभांशु शुक्ला जब अपने स्कूल पहुंचे तो कैसे पूरा वातावरण बदल चुका। शुभांशु की इस उपलब्धि में उनके शिक्षकों का योगदान जरूर रहता है, तभी तो होता है। यानी शिक्षक नौजवानों को सिर्फ पढ़ाते ही नहीं है, उन्हें गढ़ते हैं, एक दिशा दिखाते हैं। साथियों, आपके इस प्रयास को अब अटल इनोवेशन मिशन और अटल टिंकरिंग लैब से भी मदद मिल रही है। अब तक देश में 10,000 अटल टिंकरिंग लैब बन चुकी हैं। देश ने 50,000 नई अटल टिंकरिंग लैब्स को बनाने का निर्णय लिया है। इस पर भी तेजी से काम चल रहा है। इन लैब्स में भारत के नौजवान पीढ़ी को इनोवेशन का हर मौका मिले, ये आप सभी शिक्षकों के प्रयासों से ही होने वाला है। साथियों, एक तरफ हमारी सरकार इनोवेशन पर, युवाओं को डिजिटल एम्पावर करने पर बल दे रही है, दूसरी तरफ डिजिटल दुनिया के जो दुष्प्रभाव है उनसे भी हमारी नई पीढ़ी को, हमारे स्कूल के बच्चों को, हमारे स्टूडेंट्स को, हमारे परिवार के बच्चों को, हमें उनको बचाना होगा। उनकी हेल्थ और प्रोडक्टिविटी बढ़ाने पर भी बल देना ये हम सबका सामूहिक कर्तव्य है। आपने अभी देखा होगा कि अभी पार्लियामेंट का जब सत्र चल रहा था तो हमने ऑनलाइन गेमिंग से जुड़ा एक कानून बनाया है। अब ये सब शिक्षकों को पता होना चाहिए। गेमिंग एंड गैम्बलिंग, दुर्भाग्य ऐसा है कि कहते तो गेमिंग है लेकिन हो जाता है जुआ। और इसलिए सरकार ने, और बहुत बड़ा निर्णय है ये, बड़ी बड़ी ताकतें वो कभी नहीं चाहती थी कि ऐसा कानून आए और देश में गैम्बलिंग पर प्रतिबंध आ जाए। लेकिन आज एक ऐसी सरकार है जिसमें पॉलिटिकल विल है और जिसके दिल में देश के उज्जवल भविष्य की चिंता है, बच्चों के भविष्य की चिंता है। और इसलिए हमने
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you. Green Talk Social Impact Awards 2025, coming soon.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in?
Good evening, you're watching NDTV Profit and I'm Sanjana. Today we're bringing you the show not from the comfort of our studio but from one of Mumbai's most bustling markets, the Dadar market, which is all behind me, which is really the heart and soul of India's retail economy. Now just yesterday the government actually confirmed that now the GST structure would in fact change and make it more simplified and potentially life would get easier and cheaper. But let's see if this revised tax structure and the two main tax slabs is actually going to impact small businesses here. So come, let's take a look. We're currently at a store called Canopy and I'm here with the owner. आप अपना नाम बताएंगे प्लीज?
हसमुख फरिया.
हसमुख फरिया, कितने सालों से आप ये दुकान चला रहे हो?
15 years हो गया ऑलमोस्ट.
15 years. अच्छा तो ये बताइए जब GST पहला जब इंट्रोड्यूस हुआ तो आपका रिस्पॉन्स क्या था उस टाइम?
तो वो सब बिलिंग वगैरह को लेकर कैसा करेगी क्या करेगी वो थोड़ा सब दिक्कत था. लेकिन जैसे आया फिर उतना लगा कि इजी, ऐसा कुछ फर्क नहीं पड़ा इतना.
और अब जो सरकार ने जो अनाउंसमेंट किया है 2.0 का जो लागू होने वाला है, हाँ नया वाला, उससे आपको फर्क पड़ने वाला है, नुकसान होने वाला है क्या?
नहीं, इसमें फायदा ही होगा. इसमें हमारा जो 12% का स्लैब था जो 1000 के ऊपर, तो उससे अभी टेक्सटाइल इंडस्ट्री में से 5% में आ गया है. तो उसमें बिलिंग वगैरह में थोड़ा इजी हो जाएगा. पहले क्या सीए को थोड़ा दिक्कत होता था बिलिंग 1000 के अंडर का और उसके ऊपर का सब देने मैनेज करना है. तो ये हमारा फायदा है, मतलब सीधा सबसे सेम रहेगा 5%.
अच्छा, तो ये बताइए, तो आप ये बोल रहे हो कि आपका फायदा होगा because there is less headache, right? That's what he's saying, viewers, because earlier the process for GST filing was a little bit tough, and now with the slabs actually just coming down to 2, उससे आपको क्या फर्क पड़ेगा? Because the process will stay the same, no?
प्रोसेस है में, लेकिन सब अकाउंट्स वगैरह 1000 के ऊपर उसके लिए अलग से बिल बुक उसको सीए को देना पड़ता था. इसके 12% वाला है, ये 5% वाला है, तो उससे अभी दिक्कत हट गई. अभी डायरेक्ट सब 5% पे ही चले जाएगा.
ओके, एंड आपके कंज्यूमर्स या कस्टमर्स जो आके यहाँ पे, और अब फेस्टिव सीजन स्टार्ट होने वाला है, स्टार्ट हो गया है, तो उनको क्या फर्क पड़ेगा?
उनको थोड़ा इफेक्ट पड़ेगा. थोड़ा 12% का है तो सीधा 5% में आएगा, तो ऑलमोस्ट थोड़ा रेट कम हो जाएगा. 1000 के ऊपर मतलब 50-70 रुपए आगे पीछे हो जाएगा.
जो मोदी जी ने प्रॉमिस किया था दिवाली धमाका, अभी सच
अभी
में हो
लगता
रहा
है ऐसा गिरा कि थोड़ा खुलेगा एक्स्ट्रा. अभी थोड़ा क्या स्लैक सीजन चल रहा है, तो अभी से 1 महीना पहले ही कर दिया तो दिवाली थोड़ा अच्छा जाएगा ऐसा लग रहा है.
क्या आपको लगता है कि ये जो नया जो अभी स्ट्रक्चर उन्होंने लागू किया है 22 सितंबर से, ये अभी स्टार्ट होने वाला है, इसमें आपको कोई प्रॉब्लम नजर आती है?
नहीं, ऐसा कुछ प्रॉब्लम तो है नहीं. ऐसा सब इजी है, कोई टेंशन नहीं ऐसा.
ओके, थैंक यू सो मच.
ओके.
All right. So there you heard it from Hasmukh Faria, who has been running the store Canopy for the last 15 years, that initially the GST filing and the structure of it was a little bit of a headache. But now, like most small businesses, he's also welcoming the government's move. Let's take you now to other small businesses in the other market and find out how they are reacting. Along with a lot of small businesses that are in Dadar market in Mumbai, these are one of the larger showrooms. Suvidha is actually a store that is synonymous with Indian ready-made garments and wedding and festive wear. And they seem to be slightly differently impacted from the new proposed tax structure. Let's go actually speak with the manager and get you all of the details. Come on. We're currently at Suvidha, a name that is synonymous with everything to do with Indian ready-made and wedding and festive season garments. And here I'm actually standing with Pratish. Pratish, can you tell me a little about yourself, how long you've been running this store?
This store is more than 40 years, and I am here last 20-25 years here. And it's opposite the other station. Suvidha is famous for everybody, and it's a complete family shop. Everybody knows about it. It's a wedding, casual, formal, party wear, one-stop shop for everybody. We are very famous internationally and India-based, and we are located at a very right location, and it's known by everyone.
Absolutely. So let's get down to the serious stuff. The government made a late night announcement last evening and revised the tax structure for GST. How is the store and your business perceiving this revised tax structure?
So still now it's just was happiness till yesterday. Yeah, we are going to get a good GST. That 12% is going to become 5% now and everything. But overnight the things are changed. It's totally changed because they have made on the MRP, which is that 2,500 MRP, which is going to come up. On that, the 12% GST is going to become 18% GST. So I'm going to repeat it again, that less than 2,500, which was 12%, is going to become 5%. But which is more than 2,500, the MRP means the GST will change from 5. It will not be 12, it will be 18% now. So the MRP is going to increase. So my structure, wedding structure, means it's in suit, sherwani, saris, dresses, bridal, everything. Sorry, not sari. Sari is going to be 5% itself. But other things, the product, the MRP will be changed approx about 10% of the MRP.
Okay, let's simplify this for our viewers, okay? And I want you to show me what you mean when you say this,
I'll
okay?
just show you something. That
Come.
you can, So these are some products which is 6,000, right?
Okay.
You are paying 12% GST. This is more than 2,500, about 2,500. So the price is going to increase by 10% on it. So approx 500 rupees the price will increase in this. So the GST is going to be increasing by 12 to 18%. So approx it will 10% of the MRP it will be changing. We also not calculate perfectly. 8 to 10% MRP will increase from the 22nd what the government has changed the rules that. The major junk of the garments, the major Indian wedding garments, all the MRPs like dresses, salwar kameez, bridal cholis, everything, the price are going to be 10% increase. So it is going to be a difficult time, and it is just a late night. You know, you just got up in the morning and the mails and WhatsApp are just shooted out, and you know it's so difficult that so much of things have been changing. So we was just about that. Yeah, the GST will come 5%. Will be very easy, but this 18% is very difficult.
Right. Okay. So there you had it, Pratish, giving us the lowdown from Suvidha. And we're getting a little bit of a mixed bag here in Dadar market about whether the GST and the new structure is actually making life easier or then maybe potentially bad for business. All right. Let's take you through some other businesses as well. So the future certainly looks bright on paper because now the government has reduced GST from 12% to 5% on corrective lenses and glasses. So you can see better and your glasses will be cheaper. But let's find out whether that is a reality for many independent opticians such as this one in Dadar that are running on tight margins. Let's find out. Hi sir, what is the name of your store and how long have you been running it?
My shop name is Dabolkar and Sons Opticians. Okay. It has started from 1960, 65 years old.
And you have owned it all this time?
Yeah, my father was the owner. Now I am running the shop.
All right. So yesterday the government made a very important announcement. And it has made the tax that you currently charge, the GST that you currently charge on corrective lenses from 12% to 5%. So how are you viewing this?
This will definitely benefit our business because it is 7% reduction is very much. So it will definitely increase the customer flow.
Would you say that you tend to benefit from this, or does most of the benefit go to wholesalers?
No, it's not. Wholesaler also will pass on to us. We will pass on to the customers. The end consumer will benefit definitely.
I understand that you're an independent optician, right? And you are in Dadar, where I'm sure you must be helping a lot of senior citizens. You must be helping a lot of young students and children. Was there any time an aversion or people felt demotivated कि यार ये नहीं खरीदना, ये नहीं लेना है क्योंकि GST काफ़ी ज़्यादा है इस पे?
GST ज़्यादा पहले था तो अभी थोड़ा रिड्यूस हो गया है तो उससे थोड़ा फ़ायदा हो सकता है क्योंकि वो 7% का मेन जो रिडक्शन हो गया है उसकी वजह से कस्टमर को भी अभी बहुत एडवर्टीजमेंट वगैरह भी न्यूज़पेपर में आया है फ्रंट पेज पे कि उसमें रिडक्शन हो गया ये अगर तो कस्टमर का अवेयरनेस भी बढ़ गया है तो वो लेकिन ये जो इफेक्ट होने है 22 सितंबर से ही है तो तब तक वेट करेंगे देखेंगे क्या होता है फ़ायदा।
मैं अगर आपसे ये पूछूं कि आपके जो बिजनेस में हैं, आपके जो फ्रेंड्स हैं, आई एम श्योर देयर आर मेनी पीपल इन दिस सेक्टर, व्हाट वुड यू से जो what the challenges were in filing, in process, आप कितना समय